And don't underestimate the pain of isolation. It is real. This is not the human condition. Not to be comforted, not to be close, to be afraid, and you can't hug someone. Billy and Steve walked in today. I hadn't seen them in months. I can't shake their hands. I can't hug them. You know, this is all unnatural. My daughter came up. I can't even really give her the embrace and the kiss that I want to give her. This is all unnatural.
Press conference and highlighting some of the issues with the COVID-19 virus. That was Andrew Cuomo, governor of the state of New York. Lisa giving us some of the latest there, talking about testing, the need for additional beds, the need for additional supplies, and whether the federal government should be doing that versus the states currently. So lots of issues, but some of the same themes that Governor Cuomo's been really focusing on over the last several days, which is the need for more testing and more beds.
Yeah, his daily pep talk saying there are 20,000 cases, though, now confirmed in New York, very much the epicenter in the United States. This comes, of course, as an increased testing reveals an increased number of cases. 13%, he said, was the hospitalization rate. Of course, those numbers are imperfect since only the people who are presenting symptoms are the ones who are likely to get tested. He talked about what I thought was really important that he discussed was getting the economy back online. That we have to think about the fact that this is a new reality. How do you figure out how to get people back into the workforce? Do you allow healthier, younger people to get back? Can you test people who may have been exposed already and developed antibodies that don't even know, so that they can go back to work? And that, I think, is increasingly the focus. Meanwhile, if you look at markets, they are deteriorating. You're seeing the S&P, NASDAQ, and Dow all lower, led by the Dow, down 3.2%, the NASDAQ down more than 3%, the NASDAQ 1.8% decline. Looking at an S&P right now at 2233 points. Remember when people were saying that 2,500 was the breaking point? We have blown past that. Meanwhile, you are seeing a bid to bonds, 2-year yields now 0.26%, 10-year yields 0.18%, the 10-year and the 30-year also down to 1.35%. Although that bid, and I think that this is important, Paul, that bid into the long end has actually come off a bit. You've seen yields go up a little bit based on earlier lows after Steve Mnuchin, Treasury Secretary, stood on CNBC. He was planning to borrow more money on the longer end of the curve in order to pay for this incredible stimulus that is numberless but massive.
Yeah, absolutely. And also, you like to call out gold, and that's been up 2.7% today, $40 an ounce of $15.39 on gold. Right now, let's head down to our 99.1 studios in Washington, D.C. to Nathan Hager for World and National Headlines. Nathan, what do you have?
You know, Paul, as we've been monitoring that news conference from New York Governor Andrew Cuomo, we've also been paying attention to Maryland Governor Larry Hogan. He just announced moments ago that all non-essential businesses in that state will be closed effective 5 p.m. Wall Street time today. That includes retail stores that had been allowed to remain open. Hogan says this additional step is necessary to slow the spread of COVID-19 in Maryland. He joins now Wisconsin and Massachusetts in ordering non-essential businesses to shut down. In Massachusetts, Governor Charlie Baker says that order will remain in effect through April 7th, so for 2 weeks. Meantime, there are signs President Trump might not want to impose similar orders across the country. Sources tell Bloomberg the president has actually been speaking privately with aides since late last week about reopening the nation, out of concern the economic toll of social distancing could outweigh the effects of the virus itself. That is despite advice like this from Surgeon General Jerome Adams on NBC's Today Show.
Everyone needs to be taking the right steps right now, and that means stay at home.
The U.S. Senate will be back to work this afternoon trying to move forward on a massive $2 trillion stimulus to ease the economic effects of the coronavirus. Lawmakers on both sides of the aisle are optimistic they can get past sticking points like how much support to provide big business. And a day after Republican Senator Rand Paul announced he has tested positive for the coronavirus, another senator says her husband has it. Minnesota Democrat Amy Klobuchar says her husband John Bessler is in the hospital with pneumonia and low oxygen levels. She says she hasn't been able to see her husband for 2 weeks, and her doctor has advised her not to get tested. Global news 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nathan Hager. This is Bloomberg. Paul and Lisa.
Thank you so much, Nathan. Yes, some people are saying that based on this, Congress needs to get a vote in real quick. Otherwise, they're all going to be disbanded to their homes anyway at this point in order to socially distance themselves. Bloomberg Markets brought to you by Witham. For 45 years, Witham has been committed to helping businesses be in a position of strength. For guidance on business interruption, continuity issues, and remote workplace solutions, visit Witham.com. I am so excited for this next conversation because there has been one economist who has uniquely been focused on the consumer, on the health of the balance sheets of Americans for, frankly, years. And now his research is all that much more poignant. Torsten Slok, Deutsche Bank chief economist, joining us now. And Torsten, you sent out a chart this morning that was pretty stark. It was global discretionary consumer spending, a 100% decline in 2 weeks. Can you give us a sense, Torsten, of what we have seen so far in terms of the economic impact and what it might say if you extrapolate it further, given all the closures and shutdowns in the wake of the coronavirus?
Yeah, I mean, the unfortunate thing is that we went into this with delinquency rates on consumer loans already going up. We have seen, in particular on auto loans, delinquency rates go up for several years. This has to do with loans were given to people who unfortunately were not able to pay their auto loans on time. So that meant that the delinquency rate had already been slowly moving higher on a number of different consumer loans. So this, of course, is now the backdrop for the chart that I sent out that you're mentioning exactly, that we're beginning to see quite a significant drop-off in discretionary spending. And discretionary spending basically means everything from cars to washers and dryers to furniture to electronics, things that normally require financing or things that are normally bigger purchases. The nuance, of course, is that with many people working at home, you could expect to see some categories of consumer durable goods, meaning electronics and computers and other things that could be doing better. But broadly speaking, this chart specifically showed for restaurants, we've seen, and this is more on the anecdotal side, but we've seen a number of indicators begin to show that unfortunately the global consumer, and this is not only a U.S. phenomenon, the global consumer is unfortunately stepping pretty hard on the brakes when it comes to discretionary spending. And that is, of course, not particularly good news when you think about the overall picture for the global economy.
So, Torsten, over the weekend, we've seen a lot of forecasts come out, economic forecasts about the U.S. economic impact, with obviously a significant contraction in the second quarter, but most of them have a pretty swift rebound in Qs 3 and 4, suggesting a little bit of a V-type of scenario. Where do you come out on what the economic impact could be here?
Yeah, this is absolutely critical, and this is also critical for markets. I mean, what will the other leg of this V, or even whatever, if it will be a U, what will that look like? The fear we have is that it will be a muted rebound. And the muted aspect comes essentially from the fact that once we are on the other side of the virus, if there are fears that the virus is not quite defeated everywhere in the world, if there are fears that some countries still have it, if there are fears that it might still be in some emerging markets, then you do begin to wonder, well, what are then the implications, of course, also for travel, not only travel globally, but even travel domestically. What are the implications in terms of how people think about what the longer-term planning is in terms of vacations, the longer-term planning in terms of businesses doing things. So the reason why there are reason to be somewhat cautious about the second leg of the V, or the second leg of the move higher, is that we will probably come out more scarred as consumers on the other side, and corporates will, quite frankly, probably also come out more scarred, where everyone will have higher savings. And as you know too well, if you have higher savings, that means that consumption will also be muted. If you have higher savings for corporates, that also means that CapEx spending is also going to be muted. So the risks are that the rebound here is going to be more muted and more limited relative to the speed with which we are falling at the moment.
We're speaking with Torsten Slok, economist at Deutsche Bank. And Torsten, you've done a lot of work about the fact that a lot of American households don't have an extra $400 to cover emergency expenses. You've also talked about how the lower wage workers are going to get harder hit by the disruptions caused by the coronavirus. And I'm just wondering, going forward, do you have a sense of whether the fiscal stimulus currently being bandied about in Washington, D.C. adequately gets money to the people who would need it in order to continue their lifestyles and at least cushion the blow a little bit to get back to the kind of recovery that you're looking for, hoping for on the other side of this?
Yeah, this is absolutely a key question from a forecasting perspective, both for the economy and for markets. The problem is, as you know, and as you just mentioned, that if you look at the Fed data, about 40% of the population would not be able to come up with $400 if they had an emergency expense. And data from 2019 shows that roughly half of U.S. households don't have an emergency savings account, and that means that they don't have a savings account with money put aside if there is some unexpected expenses. And if you also look at the distribution of this, it is distributed more among lower income households. And if you also then look at the issues in terms of age distribution, it is also distributed more in terms of the younger people and the younger generations who don't have savings. So it will certainly have a significant impact in distributional terms on the consumer, what we're going through here. And to your question about the package that's being discussed, we need to see exactly how the design is. As you cover so well, this is still being debated, but it is pretty clear that from a market perspective, for every day that we don't get a solution, then there is a risk that this will be a deeper slowdown simply because something is needed right now. And if you go back and look at what happened in 2009, then when the Congress voted on sending checks out to consumers, it took 2 months from the bill was voted on until the checks actually arrived. And 2 months forward from today, that brings you to late May. That's a very, very long period for consumers while they still have to pay their bills on their rent, their mobile phones, the groceries, everything that's going on. And that's why discretionary spending does get a bit lower priority in that scale of things.
Is it already too late?
I wouldn't say it's too late, but I mean, as we all know, and if you take the statistic into account that half of the U.S. households really only have their checking account and the money that they have in that, and if you are so unfortunate that you lost your job through this, and you are so unfortunate that you don't have any savings, I mean, we have a rent payment coming up here on April the 1st, and maybe we'll be able to get through that, but the longer that we have to go through rent payments and payments on mobile phones, the more cautious and more hesitant and reluctant the U.S. consumers probably get. So that's why the more confidence U.S. households and markets can get that a package is coming and it's coming sooner rather than later, I do think that will be very supportive, of course, importantly for markets, but most importantly, ultimately, for the U.S. economy.
Torsten Slok, thanks so much for joining us. We really appreciate your perspective. Torsten Slok is Deutsche Bank's chief economist, giving us his thoughts on how this is all evolving from an economic perspective. Right now, let's head down. Let's get a Bloomberg Business Flash from Charlie Pellet. Charlie, what do you have for us?
Once again, good morning, Paul. Let's begin with the numbers here. Right now, looking at a 758-point drop in the Dow Jones Industrial Average, plunging another 4%. We've got the S&P down 88. That is a drop today of 3.8%. NASDAQ lower by 176 points, a drop there of 2.6%. Stocks continue to languish as investors await progress on a spending package from Congress to tackle the fallout from the corona pandemic. Measures of corporate credit risk are easing. The dollar fell after the Federal Reserve announced a massive second wave of initiatives to support a shuttered American economy. Now, as for the U.S. economy, the economic backdrop heading on into all of this, Torsten Slok is chief economist at Deutsche Bank.
I mean, the unfortunate thing is that we went into this with delinquency rates on consumer loans already going up. We have seen, in particular on auto loans, delinquency rates go up for several years. This has to do with loans were given to people who unfortunately were not able to pay their auto loans on time. So that meant that the delinquency rate had already been slowly moving higher on a number of different consumer loans.
And Slock interviewed just moments ago right here on Bloomberg Markets. We've got the Dow, the S&P, and NASDAQ lower, as I mentioned, looking at the 10-year, down 1 7/30 with a yield of 0.71%. Gold higher by 2.8%, $15.40 the ounce. West Texas Intermediate crude down 1.1% right now, $22.36 a barrel. Brent, the global benchmark barrel of Brent down now by just about 4.1%. Federal Reserve today announcing a massive second wave of initiatives to support a shuttered U.S. economy, including buying an unlimited amount of bonds to keep borrowing costs low and setting up programs to ensure credit flows to corporations and state and local governments. General Electric's aviation division cutting 10% of its American workforce as the coronavirus outbreak saps demand for commercial air travel and upends the global economy. Goldman Sachs, meanwhile, says investors should buy Boeing. Goldman says the airplane manufacturer will probably rebound once the corona crisis is resolved. We've got shares of Boeing. They are down now by 0.3%. Again, recapping the Dow, the S&P, and NASDAQ all selling off again this Monday. S&P down now by just about 83 points. That is a drop of 3.6%. I'm Charlie Pellet, and that is your Bloomberg Business Flash.
Charlie, thank you so much. Over the weekend, there was a really gloomy feeling as even some bids wanted in competition lists were sent around with funds trying to liquidate assets on a Sunday. This is highly unusual, Paul. I was getting a lot of messages about how unusual this was. The focus was on mortgage debt in particular with respect to non-agency RMBS, residential mortgage-backed securities, as well as commercial-backed mortgage-backed securities. Joining us now is Claire Boston, who's been covering the credit markets phenomenally for Bloomberg News. Claire was a co-author of a story looking at some of these bid lists as well as the actual funds that might be unwinding massive amounts of securities. Claire, can you just give us a sense of the scope here that we're talking about?
Right, Lisa, thanks so much for having me on. This is highly unusual activity to see bid lists in the billions going out on a weekend. It really speaks to just how bad this crunch has become for some of these funds. Our understanding from speaking to our sources is that this was really a scramble to meet investor redemptions, to meet those margin calls, and people were circulating lists of pretty much everything they had just because liquidity in this market has been so weak, and they just need to sell quickly to raise capital.
So, Claire, what are we actually seeing in the market today?
So the Fed overnight, or just recently, announced actions that are designed to support the market. And in terms of corporate bonds, there's been a lot of positive reaction. There was some actions aimed at the structured finance market, and a lot of investors and hedge fund participants are sort of taking a moment to digest, seeing if they will be able to get any help from these programs. The Fed program designed for asset-backed securities is focused on the AAA space, so kind of that highest quality. And that tends to not be where some of these hedge funds and these REITs that are running into trouble right now tend to focus their investments.
And also, just on the mortgage side, Andrew Brenner of NatAlliance Securities actually sent out a note this morning saying that there was a sort of better feel in the MBS market, with one small mutual fund even saying that they were getting inflows and didn't need to sell. But I do want to sort of talk about what was being sold, Claire. And there were a couple of mutual funds in particular that it sounds like got massive redemptions and had to liquidate them. Can you talk a little bit about that?
Yeah, so what we were seeing primarily with those bid lists this weekend was that non-agency RMBS, the smaller part of the market, private label securities. A lot of what was on these lists were what we call legacy. So stuff from pre-crisis in 2008. Generally sort of more off the run, less liquid bonds, and those can be harder to place. One thing that's to note here is just this situation is evolving so fast. Talking to sources, just a week ago, people weren't really worried about the residential housing market, really taking a hit here. But now that we just have a better understanding of this crisis and how bad it could be for the economy, definitely investors right now are worried about people's ability to pay their mortgages and what that will mean for some of these securities.
Claire, how is this different from what happened back in 2008 with the whole mortgage business?
So this is definitely not a case of people being very worried that these structures will blow up because, mortgages are subprime or anything like that. This is just a true sort of black swan event. Suddenly we could see a big spike in unemployment that would make it a lot harder to have these people pay their mortgages. That being said, people generally feel better about the housing market right now. Consumer leverage overall is lower, and so people aren't expecting, a 2008 style blow up that could take down the entire banks. But that being said, with so many Americans potentially out of work, that is probably going to trickle into the mortgage market.
And my understanding, Claire, is that these are sort of restructured residential mortgages that have been repackaged. So they were basically people given another chance, but considered less perhaps able to withstand a downturn. There also is concern right now about the commercial mortgage market. In just about 30 seconds here, but we got some pretty stark comments out of Tom Barrack this morning, or actually overnight, about the commercial mortgage market and how it could blow up. What are you hearing on that front?
Yeah, there's definitely a lot of concern about the commercial market, too. I would say that their investors were worried about that earlier. There are a lot of mortgage-backed securities with heavy exposure to hotels, leisure, just all of those sectors that have basically ground to a halt there. And we're really seeing some of the big credit derivative indexes, CMBX, even the AAA, the safest part of those indexes, are really taking a hit, which I think is a reflection of investors' fear about what could happen in this asset class.
Claire Boston, thanks so much for joining us. We appreciate your commentary and your work you did with your colleagues today, talking about the mortgage market, the residential mortgage market, and some of the strains in that market that we've been seeing really over the weekend into today. Claire Boston covers corporate and structured credit for Bloomberg News, and we appreciate her thoughts. Looking at the markets right here, we have weakness continuing in the S&P, down 3.9%. That's 89 points. We have the Dow down just about 4% right on the dot. So the S&P doing a little bit better, down 2.5%, but clearly waiting for some stimulus out of Washington, D.C. Right now, let's head to our 99.1 studios to Nathan Hager for World and National Headlines. Nathan.
And Paul, as that wait continues, more states are imposing tight measures to try to flatten the curve of coronavirus infection. New York Governor Andrew Cuomo is ordering hospitals in his state to boost their capacity by 50% and urging them to make it 100%. That's as the number of COVID-19 deaths across New York State has hit 157, total infections near 21,000. Cuomo says that's because testing has ramped up dramatically.
In 10 days, we have gone from testing 1,000 people per day to 16,000 people per day. Well, how much is that? That's more than any other state in the United States is testing. That's more per capita than South Korea.
Meantime, Maryland, Massachusetts, and Wisconsin have joined the list of states ordering non-essential businesses to shut down. Bloomberg's Amy Morris reports President Trump may be weighing whether to relax stay-at-home guidelines for the nation.
Sources tell Bloomberg News the president started talking privately last week about getting folks back to work against the advice of health professionals. The president tweeted on Sunday, quote, "We cannot let the cure be worse than the problem itself. At the end of the 15-day period, we will make a decision as to which way we want to go." Now, those discussions have been centering on what to do after the 15-day period ends and how to test and isolate those who are sick so healthy people can return to work. In Washington, I'm Amy Morris, Bloomberg Radio.
And just in, German Chancellor Angela Merkel's first coronavirus test has come back negative. The German leader's been self-isolating since she was exposed to a doctor who had tested positive for COVID-19. Global news, 24 hours a day on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Vattel Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that so in 10 years we're actually ready to take on those challenges when we have our first development in the water? NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Apply by the 31st of March for a chance to win your first year in halls. Visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Bloomberg LP is an equal opportunity employer. The address once again is bloomberg.com/careers.
Not completing high school is more of a social thing than it was an academic thing. I came out in the 11th grade. Nobody was embracing you. The kids were cruel. It was very difficult to be gay. Even though all these years have passed, I still had that longing to have my diploma. The hard part was determining that I was going to do it, but I definitely didn't do it alone.
At age 30, with the help of her mentor, Carissa finished her high school diploma.
I have a mentor, Maria. She convinced me to continue my education and to finish what I started to get my diploma. Just never judges. She's a true role model. If you're even considering getting your high school diploma, go get it. You can do it.
No one gets a diploma alone. If you're thinking of finishing your high school diploma, you have help. Find free adult education classes near you at finishyourdiploma.org. That's finishyourdiploma.org. Brought to you by the Dollar General Literacy Foundation and the Ad Council.
Okay, kids, Dad's gonna teach you how to dance. First, spread your feet apart. Then, pump your knee, nod your head, shake your hips, and bite your lip ever so slightly. Now, with one hand in the air, point at people with the other hand. I call that the rock star.
Dance like a dad. It's a great way to make a moment with your kids.
Now, make a face like it just smells something bad.
Visit fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know, with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
World headquarters, I'm Charlie Pellet. Another day of steep losses. U.S. stock market, in fact, lows of the day, a 900-point drop right now for the Dow Jones Industrial Average. It is down by 4.6%. The Dow Jones Industrial Average erasing gains since the election of President Trump. S&P 500 index plunging another 105 points, down by 4.6%. We've got NASDAQ down 230 points right now. That is a drop of just about 3.4%. The 10-year up 1 2/32, yield 0.73%. Gold are advancing by 2.6%, $15.37 the ounce, and West Texas Intermediate crude oil is down 2.6% right now, $22.03 for a barrel of WTI. Brent, the global benchmark, $25.64 barrel of Brent, down now by 5%. U.S. stocks languishing as investors await progress on a spending package from Congress to tackle the fallout from the coronavirus pandemic. Measures of corporate credit risk easing, the dollar falling after the Fed announces a massive second wave of initiatives to support a shuttered U.S. economy. Recapping, S&P 500 index down now by 108 points. That is a drop of 4.7%. I'm Charlie Pellet, and that's Bloomberg Business Flash.
Thank you so much, Charlie. Bloomberg Markets is brought to you by Witham, a forward-thinking, technology-driven advisory and accounting firm helping clients be in a position of strength in today's modern business landscape. Visit Witham.com to learn more. There's a question, Paul. A lot of people, particularly wealthier individuals, had been getting rather cautious in the months leading up to the coronavirus-induced disruption that we've seen recently. There is a question of how they got cautious, moving more into real estate, whether they have the cash to actually start deploying it, and whether they're starting to get perhaps a little bit more, I don't want to say bullish, but starting to pick over some of the rubble amid this sell-off. Joining us now is someone with a very unique and important perspective on this, Michael Sonnenfeld, chairman and founder of Tiger 21. It's a peer organization of ultra-wealthy individuals that come together and share their investing strategies and views. It has 770 members, more than $77 billion in assets. Michael, I remember last time we spoke with you, you were talking about how there is an increasing focus on real estate. Can you give us a sense of how some of the members of your organization were positioned heading into this and what they're talking about right now?
Sure. Well, everybody is obviously socked into their homes and gone through a transformation of being virtual. So that's new for everybody. Going into this, our members, which are not just wealthy, they're entrepreneurs. It's a subset of people with certain levels of wealth, but because of entrepreneurs, it allows them to think about this quite differently. And for the last year, people have been getting nervous about the market, but of course, nobody could have anticipated the coronavirus, nor the Russia, Saudi Arabia oil debacle. It's sort of like having a tsunami and an earthquake at the same time. So while real estate has remained tops for our members at about 28% of assets. It's actually come down as well. They had taken chips off the table over the last year and maintained very strong cash reserves at 12% so that they're not forced to sell at a bottom like this, but have enough living expenses so that they can power through or survive to the best of ability. But obviously there's a lot of devastation all around.
Michael, what are your clients thinking here as to, kind of the duration here? Are they thinking, kind of to Lisa's question, maybe time to maybe look at certain names or certain asset classes, or are they taking this could be a much longer, lower for longer type scenario?
So I don't think there's any one view. It's a collection of views, and our members who are typically in groups that meet in person now are meeting virtually. We've shifted the organization completely to virtual meetings on a dime, so to speak. And obviously some members are looking for opportunities. A number of us traded shorts at the first sign of coronavirus of the market, and that trade has turned out to be very good. But in most cases, the profits from those shorts has simply offset declines in the portfolio because you can't liquidate private equity and real estate in a month, and that's where we have a large concentration. But as to timing, I think everybody understands this is totally unique, and the medical issues, the health issues, are likely to peak within 3 to 6 months, as has happened everywhere else. But when you have the kind of economic dislocation, the question is how long will it take for the economy to bounce back? And the only insight that we have is typically it takes less time. Most people say 10 years. This could be returned in 2 to 3 years, but it's not going to be in 6 months.
Michael, I want to go to your point about the real estate investments, that there were some chips taken off the table ahead of this, but that still was a significant holding, or the biggest holding of your members. Tom Barrick, real estate investor, said in a Bloomberg television interview that the U.S. commercial mortgage market is on the brink of collapse. He predicted a domino effect of catastrophic economic consequences if the industry isn't basically backstopped by the government. I'm wondering whether any of your members are, I guess, in technical parlance, freaking out right now and trying to liquidate as much of their holdings as they can in the face of what could be even more pain.
Yeah, so you have to distinguish between the real estate equity market, and is not a liquid market other than if you own it through REITs, and the commercial credit market where there is more liquidity. Most of our members' real estate exposure is in owning buildings directly or through private partnerships, limited partnerships. And, a perfect example is my partner and I developed a Kohl's department store, meaning we owned the land and Kohl's built their own building on the land. That was a rock-solid triple net lease. But right now, Kohl's is shuttered their doors. They have no revenue, so they're not going to pay their rent. And if they may not, they haven't stopped yet. But if they don't pay their rent, then how do you pay the mortgage? And so you have this cascading effect. So what Tom is talking about is unless there's help for the rent payers, you'll have this cascading effect that the landlords can't make their debt payments, and that's where all hell breaks loose.
So, Michael, just real quickly, what do your members think the government needs to do here?
The government, first of all, needs to act decisively. Members, I think, largely expect a bailout, and they really would like the kind of leadership nationally that is coming that we've seen from FDR as an example during the war. And hats off to Governor Cuomo, who seems to have really taken the lead in the kind of communications and straight talk that is calming to people. People really would like to see a steady hand and an optimistic but realistic assessment about how to get through this.
Michael Sonnenfeld, thanks so much for joining us. We always appreciate your unique opinion on investing across a whole series of asset classes. Michael Sonnenfeld is the chairman of Tiger 21 with a unique group of investors. Ultra high net worth investors tend to have some unique ways to look at the markets as well. Looking at the markets here, a sell-off continues. We have the equity markets off here about 4%, looking at the S&P off 4.3%, same for the Dow. NASDAQ is off 2.8% on NASDAQ. So NASDAQ holding in a little bit better on the equity markets, but still the Fed's actions this morning, decisive, yes, but the market is telling you not enough, that the market needs more. Specifically, what we're hearing from a lot of market participants is that they need something from the federal government in terms of fiscal stimulus. Coming up, Balance of Power on Bloomberg Radio. This is Bloomberg.
In addition to Bloomberg Radio, you can catch the latest news and biggest newsmakers on Bloomberg Television. Look for us on DirecTV Channel 353 or check your...
The happy family of three were about to welcome a new member. That's right, they were finally getting a dog.
Buy on eBay, dog bed from £12.
First, they had to make a few adjustments.
Sell white rug.
And prepare the kids for the reality of owning a pet.
Buy biodegradable poop bags from under £6.
Everyone instantly fell in love with Little Rocky. Unfortunately, Little Rocky fell in love with a cushion. Buy, sell, eBay.
Delivery costs may apply.
From barbers to dog groomers, at Starling Bank, we'll help you keep your business off the ground. With no monthly fees to weigh you down. Your business is ready for takeoff. Starling Bank, helping business fly.
Leave it to the New York Times to make the most intelligent pop music podcast out there.
Welcome to the New York Times Popcast.
On the Popcast, the Times music staff gets together for a weekly roundtable on the hottest topics in popular music. From award show autopsies and reactions to new releases to difficult-to-process scandals and emerging themes in the music landscape, hear distinguished music critics share their perspectives on the latest music news, songs, albums, and artists of note on the New York Times Popcast. Search and favorite Popcast to join the conversation.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. It is another down day on Wall Street. Stocks sinking further as investors await progress on a congressional spending package to tackle the fallout from the coronavirus pandemic. Measures of corporate credit risk have eased. The dollar fell after the Federal Reserve announced a massive second wave of initiatives to support a shuttered U.S. economy. S&P 500 index did fall as much as 4.9% as lawmakers failed to agree on a stimulus bill over the weekend. Here's where we stand right now. In terms of U.S. equity markets, we have got the S&P 500 index lower now by 92 points. That is a drop of 4%. Dow Jones Industrial Average plunging another 760 points, also down by 4%, while the NASDAQ Composite Index right now, it is moving lower by just about 0.3%. So again, a down day on Wall Street here with the Dow, the S&P, and NASDAQ all declining. The 10-year up 1 6/30 seconds. The yield checking in at 0.72%. Gold picking up 2.9%, $15.42 the ounce. West Texas Intermediate crude oil tumbling 3.4% right now, $21.90 a barrel. Brent down 5.3%, $25.55 for a barrel of Brent crude. So again, recapping here, steep losses for the U.S. stock market. S&P 500 index declining today, down now by just about, we've got a drop now of 4%, down 91 points at 2213. The NASDAQ Composite Index down 2.4%, lower by 163 points at 6716. The Dow Jones Industrial Average of 18,398, down 772 points. Again, for the Dow, that is a drop now of just about 4%. Well, some of the other stories that we are following for you on this Monday today. We have got Boeing shares among the stocks that are declining. Boeing shares moving lower right now. We've got Netflix shares. They have been upgraded to outperform. Netflix shares also, they are trading little change right now. So again, recapping here, Dow Jones Industrial Average erasing all of its gains since President Trump was elected. Also, the Federal Reserve announcing a massive second wave of initiatives to support a shuttered U.S. economy, including buying an unlimited amount of bonds to keep borrowing costs low and setting up programs to ensure credit flows to corporations and state and local governments. I mentioned Boeing shares. They are up today as the rest of the market declines. Boeing shares pushing higher now by 1.7%. Boeing now at $96.79. Among some of the airline stocks right now, we've got Delta up by 1%. Delta $21.57. American Airlines have been higher, now lower by 2%. $10.15 on American. Southwest Airlines up by 1% right now at $32.26, and JetBlue shares, they are dropping by 4.5% at $6.82. Starbucks shuttering its stores. Starbucks shares down by 4.4%. So again, recapping here, the Dow, the S&P, and NASDAQ all declining, with the S&P 500 index down 81 points. That is a drop for the S&P of just about 3.5%. One other note, General Electric's aviation division cutting 10% of its U.S. workforce as the coronavirus outbreak saps demand for commercial air travel and upends the global economy. GE shares, they're down now by 5.8%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Balance of Power.
We have the strongest economy by far in the world.
We need an economy that works for everybody.
I am the one who has the broadest coalition.
Where the world of politics meets the world of business.
They've got the money they need to run a very competitive race.
These lawyers brought the case, and in my view, they should be sanctioned. We want certainty in the markets. We want certainty in our trading relationships.
The administration is trying to create a new divided world.
Balance of Power with David Weston on Bloomberg Radio.
Live from the Bloomberg Interactive Broker Studio, welcome to Balance of Power. I'm Kevin Cirilli, in for David Weston, Chief Washington Correspondent for Bloomberg Television and Bloomberg Radio. We are awaiting New Jersey Governor Phil Murphy's press conference, and we will bring that to you live. We're also awaiting getting Ian Bremmer, president of the Eurasia Group, and G0 Media, on the telephone. But let's first catch you up to speed with all of the developments that have been coming out of Washington this morning. I just interviewed Senator Chris Coons, the Democrat from Delaware, on Bloomberg Television earlier this morning, and he was optimistic that sometime within the early afternoon that lawmakers would be able to get to some type of an agreement on the economic stimulus bill that would provide some much needed relief to Americans all over the country. Ian Bremmer joins me now on the telephone. He is president of the Eurasia Group. Ian, thank you for joining us. Can Republicans and Democrats pass this bill today?
I don't know that they can pass it today. Right now, it doesn't look that way, but they certainly can and will pass it over the coming days, or maybe perhaps early next week. Look, the markets aren't going to like it if it doesn't get done today, but right now the politics do look increasingly challenging. We are seeing Nancy Pelosi saying she wants to take the pen on this. If that occurs, then we're not going to see it pass in the Senate.
Eurasia Group came out with this incredible report as it relates to the coronavirus and the impacts that it's having on the risks for 2020. What are some of the big takeaways that the Eurasia Group found as some of the risks now as a result of this?
Well, to be macro about it, I mean, the biggest issue is that unlike in 2008 or in 9/11, when the global order was not affected, I mean, people's lives were affected all over the world, but not the nature of how the world actually worked. The United States was still running stuff, right? The alliances were still in place. That is not the case with this crisis. this is fundamentally going to change the global order. American alliances will be shaken. Countries will pivot towards Beijing. China's role in the world will be dramatically different on the back of this. And, I mean, look, we have to, for the next weeks and months, we're going to have to focus on just getting through this crisis, but we're also going to need to spend a fair amount of time thinking about what we all look like, how we live like on the other side.
Let me pick up on that point that you made about China, because there's been so much that has been said, so much that has been insinuated about China and the United States as it relates to this as it relates to the pandemic. Will China be better or worse off post-pandemic in its world standing?
They'll be much better off.
Really? Why do you think
Well, I mean, first of all, because despite the fact that they're responsible for the initial crisis because they covered it up. And while they covered it up, millions of Chinese were traveling all over the world. And so that Wuhan epicenter did move across China and also moved to Italy and Iran and Washington State. So I'm not taking away the responsibility that they had and failed. But their response since then has been exemplary in terms of a large economy shutting this down and getting back into shape in a way that the Americans and the Europeans are showing themselves inadequate and not up to the task. Furthermore, an America First Trump administration is much more transactional, much more unilateralist in the way that other countries respond to it. While the Chinese have really stepped up public diplomacy, they are, of course, where you get all of your medical supply chain from. And not only are they making advantage of that by selling it everywhere, but they're also doing a lot of humanitarian donations of the equipment as well as the personnel across Europe, the Middle East, emerging markets. The Americans are not. And so you really see Xi Jinping positioning himself to play a more dramatic leadership role on the back of this, and other countries seeing that they need the Chinese much more than they thought they did.
Ian Bremmer's on the line. He is the president of Eurasia Group and G0 Media. Ian, I'm so grateful for you to lend your time. They have this great report out on the Eurasia Group about the risk that the coronavirus poses, and they've got 10 big takeaways. I'm focusing on the China front because I think that that's the most pressing in terms of where this goes. But so let me ask a follow-up question, because I hear what you're saying, Ian, as it relates to China, how they handled this versus how other countries have handled this. That said, when I interview lawmakers on both sides of the aisle, they are incredibly apprehensive about China. They want to rebuild supply chains as it relates to the medical and pharmaceuticals and drugs that were so reliant upon China. And I'm wondering if they were so unforthcoming, if they didn't give out all of their data about this, don't you think that there would be an international consequence against General Secretary Xi Jinping as it relates to this? I mean, shouldn't he be held accountable for withholding data and information that could have prevented this all around the world?
That's a very good question. And certainly I think another U.S. administration might be more effective in pressing that case. But it's hard. And so far, no. I mean, what I see is very different. I see the United States moving towards decoupling themselves from the Chinese, but I see other countries.
All right, we got to leave it there, and I'm sorry. This is Bloomberg.
Jason Kelly and Carol Messers.
The happy family of three were about to welcome a new member. That's right, they were finally getting a dog.
Buy on eBay, dog bed from £12.
First, they had to make a few adjustments.
Sell white rug.
And prepare the kids for the reality of owning a pet.
Buy biodegradable poop bags from under £6.
Everyone instantly fell in love with little Rocky. Unfortunately, little Rocky fell in love with a cushion. Buy, sell, eBay.
Delivery cost may apply.
Imagine winning 10 grand. Yes! With Set for Life, you could win 10 grand every month for 30 years. Get in! Amazing! Woo! Yes! Sweet! Unbelievable!
Play Monday, and you could make every month amazing with Set for Life and the National Lottery. Your numbers make amazing happen. Prize may be capped. Rules, procedures, and game-specific rules apply. Players must be 16 or over.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. 802-point drop right now in the Dow Jones Industrial Average, down 4.1%. We've got the S&P lower by 95, down 4.1%. NASDAQ down 177 points, a drop there of 2.5%. 10-year up 1 and 4/32, the yield 0.72%. Another day of fast-moving markets. Great day to keep it locked in, as you have been accustomed to doing, to Bloomberg Radio for the very latest developments. We're monitoring Washington. Stocks sinking further as investors await progress on a congressional spending package to tackle the fallout from the coronavirus pandemic. Measures of corporate credit risk are easing. The dollar fell after the Federal Reserve announced a massive second wave of initiatives to support a shuttered American economy. Right now, gold is up 3% at $15.44 the ounce. West Texas Intermediate crude lower now by 3.2%. A barrel of WTI $21.92. Brent the global benchmark $25.50. Brent down 5.5%. So again, recapping here, steep losses for the Dow, the S&P, and NASDAQ. The S&P is down 95 points, a drop of 4.2%. The Dow down 815, down 4.3%. NASDAQ down 178. That is a drop of 2.6%. I'm Charlie Pellet. That's a Bloomberg Business Flash. Balance of Power continues. Once again, here he is, Kevin Cirilli.
I'm Kevin Cirilli, Chief Washington Correspondent for Bloomberg Television and Bloomberg Radio, and we are monitoring a host of different fronts as it relates to the congressional developments on the economic stimulus bill. The Republicans' $2 trillion bill increases money for bailouts as well as states in transit. Earlier today on Bloomberg Television, I spoke with Energy Secretary Dan Brouillette about the oil industry in particular and how that's being impacted by this, not just by the coronavirus, but by the Russia and Saudi standoff. Take a listen to our interview. What is the administration doing to protect jobs as demand crumbles, Mr. Secretary?
Well, thanks, Kevin. I appreciate being here today. I look forward to the conversation. You know, as we've heard all along, Secretary Mnuchin is up on the Hill this morning. It's important for Congress to pass this bill for a number of different reasons, but first and foremost to provide liquidity to the market, which includes the energy companies as well. We're working very closely with Secretary Mnuchin and the Congress on this package. We're hopeful that they pass it today. But what we're seeing across the energy sector, Kevin, is not unusual and very much akin to what we're seeing in other sectors.
Well, in terms of that bill, a follow-up on that particular point, is oil important for national security? Because if it is labeled as such, that obviously would open up the sector for qualifying for a host of different other provisions as a part of that stimulus.
Well, it is, Kevin. You know, we have in America a strategic petroleum reserve down in Louisiana and Texas for precisely the reason that we're seeing today in the marketplace. Market disruptions from time to time can place a very important supply shock on the provision of oil throughout the country. So we've created this petroleum reserve for exactly these types of situations.
And as it relates to that, I mean, does the administration have plans to buy $20 billion in oil? And where would that money come from? There's been some reporting on this.
Kevin, the plan, as we see it, what the president announced last Friday was to purchase approximately 75 to 77 million barrels of oil to replenish or fill up the strategic petroleum reserve. We're working closely with Congress for funding for that effort. You know, we don't know exactly where they stand because obviously they haven't passed the bill. But we'll be working with Congress all throughout the day to ensure funding for that particular project.
Secretary Brouillette, you've also announced a public-private partnership with different companies, including IBM, a high-performance computing consortium. What would that do?
Well, what we're doing is making available the resources at the U.S. Department of Energy to the Corona Task Force, as well as to scientists throughout the country to help provide a solution, if you will, to this coronavirus pandemic that we're experiencing. The United States Department of Energy owns the two fastest supercomputers in the world. In addition to that, we have several other computers that we have also made available. We're working in concert with companies like IBM and others, Amazon and Google, to make these resources available to researchers all throughout the country.
All right, so while all of this is going on with the coronavirus, there's clearly developments in the Middle East as well. Do you support some kind of oil dumping investigation that is being taken against the Saudis and Russians? Some senators that I've spoken with, Mr. Secretary, as you know, they've called for that.
Sure, I've seen the comments and I've seen the calls for that. I'm not privy to exactly what they would like to see done. I'll leave that to my colleagues at the Department of Justice. Dumping cases are something that are going to make its way through the court system, either in the domestic court system or the international court system. But I'll leave that to my colleagues at the U.S. Department of Justice to sort out.
And Mr. Secretary, just two more questions as it relates to that. There's also been reports that some Energy Department officials want Saudi Arabia to quit OPEC and forge an alliance with the United States. They argued that would stabilize oil prices. Is that something, sir, that you'd like to see happen?
There are many, many ideas that have floated around the policy space. That is one of them. I don't know that that's going to be presented in any formal way. As part of the public policy process, if you will, our interagency partners often get together and talk about a number of different items. But we've made no decisions on this. I'll work closely with Secretary of State Pompeo and others. At some point, we'll engage in a diplomatic effort, if you will, down the road. But no decisions have been made on anything of that nature.
And just one final question for you, Secretary Brouillette. As it relates to the Saudis and the Russians, have you talked to your Saudi counterpart, and what have you been doing to navigate this dispute between the Saudis and the Russians?
Well, we have had conversations as we normally do. I have not had a conversation with Prince Abdulaziz about any conversations that he may have had with the Russians. It's not appropriate for us to do that. I will leave that to our State Department colleagues as well as to the President of the United States and others at their level. But we will continue the routine conversations that we have from time to time.
That was Energy Secretary Dan Brouillette speaking earlier today on Bloomberg Television. Reggie in our control room alerts me that New Jersey Governor Phil Murphy is speaking at a press conference. Now let's take it to New Jersey to listen to Governor Phil Murphy.
Assuming we have the supplies and the manpower, and will remain open until daily capacity is met. We urge everyone to please be patient, and we know this has required patience. We've seen the stories, we've heard them directly from folks who have waited in long lines. And please ask you to follow the directions of state and local law enforcement, as well as the brave women and men of the New Jersey National Guard who are on site. Again, I thank each and every one of them, and I express our tremendous gratitude again to FEMA Region 2 for their partnership in getting this site open as they did with the site at Bergen Community College, and also to the Department of Health's teams and all the medical personnel on site. Additionally, and I cannot stress this enough, again, you're not hearing this for the first time, if you are not exhibiting symptoms, if you do not show signs of respiratory illness, you will not be tested. We know there is pent-up demand. We get that. We understand that. And we are working as best we can to ensure that the testing resources we have available to us are properly distributed and preserved for residents who are exhibiting symptoms and need to be tested. So please help us out there. Also, I mentioned Union County over the weekend. I want to mention that Hudson County has announced the opening of a testing site for its residents and first responders at Hudson Regional Hospital in Secaucus. I just got a text as I walked in from the CEO of that hospital. This site is open by appointment only to individuals exhibiting symptoms of respiratory illness. And if you need testing, this is for the Hudson County site, please call 201-388-1097. Again, 201-388-1097. Again, you must be either a Hudson County resident or a first responder working in the county, and you must be exhibiting symptoms. And again, you must call on that particular site for an appointment. Do not just show up. I want to thank need testing. This is for the Hudson County site. Please call 201-388-1097. Again, 201-388-1097. Again, you must be either a Hudson County resident or a first responder working in the county, and you must be exhibiting symptoms. And again, you must call on that particular site for an appointment. Do not just show up. I want to thank the leadership of Hudson County, led by County Executive, one of the greats, Tom DeGise. the leadership of Hudson Regional Hospital, and Secaucus Mayor Mike Ganelli and their teams for their partnerships and efforts. Before I go on testing, in a world of limited resources and manpower, we're going to be, and by the way, we've been as aggressive on testing as any American state. We've been as out there expanding as we predicted testing dramatically. We are going to come to a moment sooner than later, I would guess, as it relates to manpower, healthcare workers in particular, PPE, the actual specimen collecting equipment that is needed to take the intake. We're going to come to sort of forks in the road between, I'm beyond my pay grade, Commissioner, but between resources and manpower dedicated to testing versus resources and manpower dedicated to care. And that's a balance we're going to have to get right. And as much as we want to continue to be a leader in testing in our country, the fact of the matter is, in a limited resource world and a limited manpower world, we may have to tilt the machine more toward the care side. As Attorney General Graywall has announced this morning, I believe, certain low-level offenders will be released. Was that this morning, Gabir?
The process
has started this morning. Certain low-level offenders will be released from county jails to prevent the spread of coronavirus within our corrections system. This is a prudent measure, and all efforts have been made to ensure public safety. The Attorney General will address this shortly. I don't know that there's any other American state that's done this. We got a lot of questions over the weekend on it, and I applaud the Attorney General for beginning that process. More on that in a moment. Additionally, this morning I signed an executive order suspending all elective surgeries or invasive procedures, both medical and dental, effective at 5 p.m. this Friday, March 27. 5 p.m. this Friday, March 27. No operation that can be safely delayed as determined by a patient's doctor or dentist will be performed after this time and until further notice. We must take this step, and it doesn't bring us joy to take this step, but we have to lessen the burden on our healthcare system and to preserve especially the personal protective gear that our medical responders need, and which, as we know, is in short supply, not just in New Jersey, but nationally. I am pleased that the New Jersey Hospital Association, in partnership with the Department of Health, the New Jersey State Police, and the Office of Emergency Management, or as we call it, OEM, will be centralizing, effective, I think, immediately, the efforts I believe this is immediate, to manage our PPE supplies. OEM at the Rock, where I'm headed after this for the video call with the President and Vice President. OEM will be coordinating with the Hospital Association to maintain an ongoing inventory of statewide PPE supplies to ensure that the individual needs of hospitals and first responders are being properly and efficiently fulfilled. I thank our healthcare systems for their partnership in sharing their inventory and for their cooperation. As I've said many times, we are all in this together, and that doesn't just mean all 9 million of us as residents, but also our various healthcare networks. So thank you to each and every one of them. And again, Kevin Slavin and I spoke about this over the weekend, and I want to give him, as its chair of the association, a particular shout out. I know you'd want to add Kathy Bennett to that list as well. The Diabetes Foundation has also opened a hotline for individuals living with all types of diabetes. You were listening to the New Jersey Governor, Phil Murphy, speaking at a press conference. I'm Kevin Cirilli, Chief Washington Correspondent for Bloomberg Television and Bloomberg Radio, in for David Weston. I'm broadcasting from Washington, D.C. Luke Kawa, Bloomberg cross-asset reporter, I'm pleased to say, joins me on the telephone line. Luke, great to catch up with you. I hope you're doing well. What have we seen in the markets today?
But to get the two markets in terms of what you want to look at in the story or the takeaway you want to.
It looks like we're having a little bit of difficulty. Luke, can you hear me?
Yes, I've got pretty good. Do you have me?
Yes, it looks like we're having a little bit of difficulty hearing you. So why don't we work on improving his connection? And just to reset here, we are still awaiting President Trump's press conference. We're also awaiting for the administration to give some new numbers as it relates to coronavirus testing. Up on Capitol Hill, lawmakers are still trying to get to some type of compromise. And coming up, we're going to cover more of the markets as well as the latest as it relates to coming out of Capitol Hill. I'll tell you about my interview with Senator Chris Coons, a Democrat from Delaware. I'm Kevin Cirilli, the chief Washington correspondent for Bloomberg Television and Bloomberg Radio. I'm in for David Weston, and you're listening to Bloomberg Radio.
Money Minute. U.S. stocks are down about 4% as investors are disappointed that Congress has not yet passed an economic stimulus plan and on disappointing news about the economy. St. Louis Fed Chief Bullard says unemployment may hit 30% in the second quarter. The Dow is falling 775 points, S&P down 4%, NASDAQ dropping 2.5%. But the Federal Reserve has announced a massive wave of initiatives in an effort to keep credit flowing to companies and state and local governments. As of today, small businesses in all 50 states can apply for federal corona disaster relief loans, but advocates say loans alone won't cut it. They're calling for $500 billion in support, split between low-interest loans and cash grants. Donna Wilson, Bloomberg Radio.
Hey, y'all, Jeff Foxworthy here. Now, if you've ever found yourself repeating the same thing over and over for 75 years, you might be Smokey Bear.
Only you can prevent wildfires.
That's why I'm filling in for Smokey to switch things up, because there's a lot more to say. And I should know because my grandfather was a firefighter. And one of the things he taught me is that the people that love the outdoors the most are often the ones accidentally starting wildfires, which means always BYOB. No, bring your own bucket to the campfire. And be extra careful with things like burning yard trimmings. Don't just walk away, or chances are you might be starting a wildfire. So for the love of the outdoors, go to SmokeyBear.com to learn more about wildfire prevention. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
Sweet strawberry icing. You're in Goodwill, and just past that vintage denim jacket you spot miniature donut earrings. You lean in. That's the scent of shopping success. Because at Goodwill, every item you buy funds local job training and more. So bring home those donut earrings and bring home so much good to your community. Goodwill. Bring good home. Brought to you by Goodwill and the Ad Council.
Market upheavals.
The narrative is driven by uncertainty about the virus.
Political reversals.
It's not clear that some of the Republicans up on the Hill are agreed with the Republican White House.
Economic shifts.
The macro clearly being driven by the coronavirus outbreak.
Everything seems to be in motion.
Will it also mean a global recession in your view now?
But here, you're on solid ground.
Looking forward to guiding you through all of this.
Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening. You're listening to Balance of Power with David Weston on Bloomberg Radio.
I'm Kevin Cirilli, Chief Washington Correspondent for Bloomberg Television and Bloomberg Radio, in for David Weston. Coming up, the latest market reaction to the economic stimulus that is stalled in Washington, D.C. But first, let's get a check for a market report with Greg Jarrett. Greg?
All right, and here's what's going on. We have got the Dow, the S&P, and NASDAQ all declining. We are off our session lows right now. S&P 500 index down 69. That is a drop right now of 3%. NASDAQ down 105, a decline there of 1.5%. Dow Industrials well off their session lows. Right now we've got the Dow down by 580 points, a drop there of 3%. 3%. So stocks sinking further as investors await progress on a congressional spending package to tackle the fallout from the coronavirus pandemic. Meanwhile, the Federal Reserve announcing a massive second wave of initiatives to support a shuttered American economy. We've got the 10-year up 26.30 seconds. The yield now is 0.75%. Indeed, the Fed pumping even more money into the U.S. economy. And let's get more on that story from Bloomberg's Vinny Del Giudice.
In another dramatic move, the Fed will purchase unlimited amounts of bonds to keep interest rates low. It's also orchestrating credit programs to help corporations, state and local governments, and planning aid for small and medium-sized businesses. It's all hands on deck at the central bank. Vinny Del Giudice, Bloomberg Radio.
Gold surging now by 3%, up $44 the ounce at $15.42. West Texas Intermediate crude oil tumbling 3.2%, $21.19 a barrel on WTI. Actually, let me recheck that, $21.91 on WTI. Brent is at $25.18, down by 6.6%. Again, to be clear, barrel of Brent right now, $21.91, lower by 3.1%. Again, recapping here, another day of losses for the U.S. stock market. The Dow, the S&P, and NASDAQ all declining by 2% or more. NASDAQ had been positive for much of the morning, down now by almost 2%. S&P's down 3.5%. Dow Industrials down 3.5% as well. Got a recap on the 10-year with a yield there of 0.77%. I'm Charlie Pellet, and that is the Bloomberg Business Flash.
Thank you, Charlie. Sorry about introducing you as Greg Jarrett. I had a momentary lapse. I'm Kevin Cirilli, Chief Washington Correspondent for Bloomberg Television and Bloomberg Radio. We're all working from home, and those things are going to happen. I'm joined now by Michael Greats. He is the professor of tax law at Columbia University. He's the former assistant to the Secretary, Special Counsel, and Deputy Assistant Secretary for Tax Policy at the Treasury Department. He's also the author of the book, The Wolf at the Door, The Menace of Insecurity and How to Fight It. Michael, thank you so much for joining us. What are the details of this economic stimulus bill that are grabbing your attention?
Well, thanks, Kevin, for having me. I think the first thing is this is not a stimulus bill. It's a survival bill for many people, both economically and literally. Obviously the details are not clear, but the priorities, the main priorities in my mind are first that we've got to take care of the hospitals and their needs and the healthcare workers and their needs. My daughter is a cancer doctor at St. Jude's Children's Hospital in Memphis. They are well funded and they can't get the right kinds of masks or enough masks, and so obviously this is the first and most important priority. And then we need to help workers, and they're the big problem, which we talk about in our book, is that unemployment insurance in the United States simply doesn't work. And so if it were on a solid foundation, you could build on existing unemployment insurance, but instead we've got a patchwork of state-based systems that's 85 years old, and it recently has been covering about a quarter of the unemployed workers. And so this is why Congress, I think, is looking to just handing out cash to everybody they can find because they don't have a good foundation to be building on. It's a shame, but there doesn't seem to be a good alternative.
It really is remarkable because, and I like the way that you set that up as this is not an economic stimulus bill, this is an economic survival bill, because so many Americans and small and medium-sized companies are having to make horrific decisions that seemed unimaginable just a week ago. And so I'm wondering, just from a procedural standpoint, where can people go if they want to get information about the different loans that are available, the Small Business Administration, as well as state level, local level, because so much of the headlines coming out of the media just reference the $1,000, $1,200 checks, but there's other loans available. Can you just help us navigate through that for a second?
Well, I think it's a very difficult, complicated question that you're asking. Let's start with large businesses. Most large businesses are not cash constrained. And if they were really interested in protecting their workers and their communities, as the Business Roundtable has now said they are, they would be maintaining their employment rather than laying people off, at least until we know where this is going and for how long. And the Federal Reserve is actually now making great efforts to continue making sure that they're not cash constrained by buying bonds and the like, and seems to me to be well positioned to do so. Small and medium-sized businesses are in a very different position. For some of them, they can call the Small Business Administration and try and get loans, although I suspect the Small Business Administration today is as hard to get in touch with as the IRS is on any other day. So getting through is going to be quite difficult. But you know, a lot of small and medium-sized businesses are not eligible for small business loans. Perhaps when this so-called stimulus bill gets done, it will expand the ability for that, or create whole new loan programs. And there are a lot of individuals who are independent contractors and part-time workers or freelancers. They don't, whether they can get their money from the IRS when they send out these cash payments, or the Treasury, because they filed tax returns, then they may be able to do it. But there are going to be a lot of people who slip through the cracks, the people who are unbanked, the people who are, have been struggling for a long time, may not owe any income taxes. Hopefully, the government will put up phone numbers and have computer ability to check that people aren't just making it up, that they can call and get their money. But this is a huge, complicated problem for the federal government, unprecedented in memory, and certainly in our lifetimes.
Michael Grates is on the line. He has previously worked at the Treasury Department. He is he's also a professor at Columbia University of Tax Law. We have 60 seconds left, but very quickly, tell me something that gives you optimism, an optimistic thing that you've noticed and observed, whether it's relating to the economic stimulus or elsewhere.
Well, I've got two things quickly. Good. One is that people do seem to be staying at home. I'm in New York City, which is one of the epicenters of the virus, and the streets look quite empty.
Good.
So that's encouraging. And the other thing is that even though there's a little back and forth and there are a few stumbles, Congress is going to find a way to do massive bipartisan legislation that's going to help a lot of people. My hope is that they won't let this raging virus go to waste, and they'll try and firm up things for the longer term.
Michael Grates, professor of tax law at Columbia University, previously at the Treasury Department, and the author of the book, The Wolf at the Door, The Menace of Economic Insecurity and How to Fight It. Much more coming up next. I'm Kevin Cirilli, Chief Washington Correspondent for Bloomberg Television and Radio, in for David Weston. This is Bloomberg.
Leaders are born. What does it take to get the markets back on the rails?
The happy family of three were about to welcome a new member. That's right, they were finally getting a dog.
Buy on eBay, dog bed from £12.
First, they had to make a few adjustments.
Sell white rug.
And prepare the kids for the reality of owning a pet.
Buy biodegradable poop bags from under £6.
Everyone instantly fell in love with Little Rocky. Unfortunately, Little Rocky fell in love with a cushion. Buy, sell, eBay.
Delivery costs may apply.
A change is coming. Millions of people across the UK are realising that if their broadband's out of contract, they could be out of pocket. So it's time to switch and save with Vodafone Superfast Broadband for £22.95 a month. Join the Great British Broadband Switch today. The future's exciting. Ready? Vodafone.
18-month contract subject to credit check. Superfast 1, 73% of customers receive sync speeds above 35 megabits per second. Source Ofcom fairer pricing. Price may change during your contract. See vodafone.co.uk/broadband.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Another day of steep losses for the U.S. stock market. NASDAQ had been higher for much of the morning, turning lower now. We have got the Dow, the S&P, and NASDAQ sinking further as investors await progress on a congressional spending package to tackle the fallout from the coronavirus pandemic. Stay with Bloomberg for the latest developments, any developments out of Washington. Federal Reserve, meanwhile, announcing a massive second wave of initiatives to support a shuttered U.S. economy. Here's where we stand. Stocks lower across the board right now with the S&P down 61, a drop there of 2.6%. We've got the Dow Jones Industrial Average down 504 points. That is a drop right now of 2.6%. And NASDAQ is down 64 points, a drop of 0.9%. 10 years up 25-30 seconds, yield 0.76%. Gold advancing 3.3%, 15.47 the ounce. And West Texas Intermediate crude down 1.4%, 22.27 a barrel. Again, recapping here, the Dow, the S&P, and NASDAQ all lower, 56-point drop right now for the S&P 500 index, down by 2.5%. That's the latest from the business desk. Lots going on today. Keep it locked into Bloomberg for the latest on the markets. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm Kevin Cirilli, Chief Washington Correspondent for Bloomberg Television and Bloomberg Radio. In for David Weston, we are monitoring multiple fronts today, both the markets and the news coming out of Washington. This as lawmakers continue their debate in the Senate with regards to the economic stimulus bill. It had hit a major hurdle late last evening. I've been talking to senators all day, including Senator Elizabeth Warren. I've been talking with staffers as well on both sides of the aisle. And what they tell me is that they're optimistic that some type of bill will get through the Senate later today. So based upon Bloomberg's reporters who are covering this, literally working round the clock, what's going on now is that a series of speeches and procedural votes are taking place in a wonky Washington term known as cloture. That failed last evening, but Senate Majority Leader Mitch McConnell trying to have some type of breakthrough this afternoon to advance this piece of legislation. This is 80 million Americans impacted by the stay-at-home orders from the various states. I want to take you now to an interview that I conducted with Senator Chris Coons. He's a Democrat from Delaware. He's really been at the forefront of crafting the small business and medium-sized business language in the economic stimulus bill. Take a listen to my interview from earlier today on Bloomberg Television with Senator Chris Coons. Where do things stand in terms of negotiations on the economic stimulus bill?
Well, Kevin, after a very long night of negotiations, at this point it's down to shuttle diplomacy between Senator Schumer and Treasury Secretary Mnuchin. Very big pieces of this bill were resolved in a good and bipartisan basis. $350 billion in new lending authority for small businesses and nonprofits that employ fewer than 500 people. Loans that would turn into grants for those companies and nonprofits that keep people on payroll or that bring them back onto payroll. That's one, I think, of a number of very positive provisions. Broadly, there's agreement on immediate cash payments to individuals to try and put a floor under families who are facing very significant financial pressures. But where we haven't come to a final agreement is around transparency for the $500 billion corporate bailout fund that, at least as of the last briefing I got, still had a lot of discretion for the Treasury Secretary and not a lot of transparency. If we can't come to an agreement on the transparency and accountability provisions for that $500 billion fund, I'm going to urge my leadership to just take that off the table for the moment, and let's pass the support for hospitals, the expanded unemployment insurance, the $350 billion in immediate loans to grants for small businesses and nonprofits, and the direct payments to American families. That would give some real confidence to folks watching who are wondering what's the path forward. We do have to remember that mid-size and large corporations are critical to stabilizing our economy. I think what the Fed did this morning was a positive step. Frankly, we ought to be able to get this done The Delawareans I've heard from want us to resolve this today on a bipartisan basis, but they also understand why I'm holding firm for some transparency and accountability in a fund as big as $500 billion.
Well, Senator, I mean, and with regard to that, I mean, what I'm hearing from you is saying that you want to split off, and other lawmakers want to split off the checks as well as the free testing components of the economic stimulus, and then leave the bailout bill separate. Is that what I'm hearing? And what are the chances? I'm just trying to get information here. What are the chances of that happening?
Let me try again. What we should do is quickly negotiate to a resolution, minimal, reasonable transparency and accountability protections, and pass the whole package. That's what we should be doing. I was just saying, perhaps in response to a previous question I'd heard, I'm saying if we cannot get to agreement on that, minimal transparency and accountability on this $500 billion Secretary of the Treasury-driven fund, I want to make sure we get everything else done today as soon as we can. There's other priorities I've been fighting for, greater support for states and counties, because an awful lot of the folks who are actually on the front lines today, the people who work in public hospitals, the ambulance drivers and paramedics, the orderlies and the nurses, we need to have more direct support for the county and state governments that employ our departments of public health and our frontline first responders. That's something that was a sticking point last night. I'm hoping to hear there's been real progress on that this morning.
I hear you on that, and I want to talk about small businesses in a second, but I want to bring it back to this $500 billion fund and the portion of this bill. You talk about transparency. Get specific for me, Senator, because a lot of folks are trying to figure this out in real time. Specifically, what additional transparency measures do Democrats want to see in this bill?
A positive step forward that's happened is that there is now funding in my portion of the bill, which is the Financial Services Appropriations Subcommittee. We do now have the funding to operate an accountability board for how corporations spend these funds. I don't see that there's yet final agreement on the language of what is the scope of that accountability board. As it was drafted last night, the last version that I got to see, there was very broad discretion by the Secretary of the Treasury. So, for example, if a corporation takes a multi-billion-dollar federal bailout and simply uses that money for juicing their stock price and increasing executive compensation, there was no clear mechanism for that to be resolved. If instead they use it to stabilize their workforce, to stabilize their operations, and they ultimately repay it with some modest interest amount, that should be the goal of the overall program. I'm not one of the people who's in the room that's finally negotiating the details. I am optimistic that we will get an update here within the next half an hour, that they've made progress, and that we'll have a noon vote. But I am willing to defend our core values. And frankly, I hear from people in Delaware, even though there's urgency to getting this done today, that they don't want a $500 billion corporate bailout fund with no transparency or accountability. The specifics here, the exact language, is being negotiated even as we're speaking.
That was my interview with Delaware Senator Chris Coons, a Democrat, from earlier today on Bloomberg Television. We're carefully monitoring the developments on the Senate floor as they have a series of procedurals that they're going through before an anticipated vote early this evening on the economic stimulus bill. Some breaking news, headline crossing the Bloomberg terminal as we speak. Boeing to suspend sound production operations for 14 days. Again, Boeing to suspend sound production operations for 14 days. Coming up, much more on that and the market reaction as it relates to all of this. Keep it right here. I'm Kevin Cirilli, Chief Washington Correspondent for Bloomberg Television and Bloomberg Radio. I'm filling in for David Weston. You can check out all of our coverage on Bloomberg.com, the Bloomberg Business app, or on radio.com, iHeartRadio, and Spotify. And on Bloomberg 99.1 FM, I host Bloomberg Radio Sound On. So just to reset here, I'm Kevin Cirilli in for David Weston. We're monitoring the developments on the Senate floor, where again, there is a series of procedures
Have you ever thought,
The happy family of 3 were about to welcome a new member. That's right, they were finally getting a dog.
Buy on eBay, dog bed from £12.
First, they had to make a few adjustments.
Sell white rug.
And prepare the kids for the reality of owning a pet.
Buy biodegradable poop bags from under £6.
Everyone instantly fell in love with little Rocky. Unfortunately, little Rocky fell in love with a cushion. Buy, sell, eBay.
Delivery costs may apply.
The all-new fuel-efficient Vauxhall Corsa is now available. With 0 deposit and 0% interest. It's an offer you need to lock down before it's too late. Search Corsa offer. Vauxhall. New rules Britannia. Personal contract purchase on selected new Vauxhall Corsas. Subject to status. Terms and conditions apply. Customers must be 18 or over. Vauxhall Finance. Offer ends 31st of March.
This week at Tesco, extra large Easter eggs are 2 for £8. And we've got an extra large choice on all your favourite brands, including Cadbury's, Reese's and Galaxy. A 2 for £8. The only thing that isn't extra large is the price. Tesco. Every little helps. Available in the majority of larger stores and online. Delivery charges may apply. Ends 31st of March.
Leave it to the New York Times to make the most intelligent pop music podcast out there.
Welcome to the New York Times Popcast.
On the Popcast, the Times music staff gets together for a weekly roundtable on the hottest topics in popular music. From award show autopsies and reactions to new releases to difficult-to-process scandals and emerging themes in the music landscape, hear distinguished music critics share their perspectives on the latest music news, songs, albums, and artists of note on the New York Times Popcast. Search and favorite Popcast to join the conversation.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
This is Balance of Power with David Weston on Bloomberg Radio.
I'm Kevin Cirilli, live from the Bloomberg Interactive Brokers Studios. This is Balance of Power. I'm Kevin Cirilli, Chief Washington Correspondent for Bloomberg Television and Bloomberg Radio, filling in today for David Weston. Jack Fitzpatrick is on the line. He is Bloomberg Government Congress reporter. Jack, give us the latest. Where are we in the Senate with the Senate economic stimulus bill?
Right now, we're still totally stalled. We're coming up on a vote probably in 30 to 45 minutes that is actually the same kind of procedural vote that failed yesterday. They need 60 votes to advance. They only got 47 yesterday. Democrats say there's still no bipartisan deal. McConnell went ahead and scheduled this vote. This really happened because on Saturday, Republicans cut off or largely cut off discussions and said we have to take what we've talked about and turn it into a bill. Democrats said they really were never finished. So now Nancy Pelosi plans to introduce a bill. She's got a press conference at 2 o'clock and has put out a statement laying out some priorities where it looks to be a bill with at least a few priorities Democrats wanted that they didn't get in this Republican bill. They have talked about tougher restrictions on any companies that get a federal loan or you might call it a bailout. It's got some measures on elections and ensuring that people can vote by mail that isn't in the Republican bill. It's got $40 billion for schools and universities that have had financial issues because of this. So we're still seeing competing visions from Republicans and Democrats. And over in the Senate, we're going to see another vote that Democrats have already said is going to fail.
So, I mean, it's hard for me to even ask a follow-up question because my mind is where I believe the whole country is, which is, are you kidding me that Republicans and Democrats can't get this economic stimulus bill at a time when literally millions of Americans are running out of money, and small business CEOs, medium-sized business CEOs are going to have to make some unthinkable decisions just from 1 week ago. I mean, how do you gauge the chances of this actually getting done by the end of the day today?
By the end of the day today, everybody is still hopeful. Schumer just said on the floor he still thinks they can get something done by the end of the day. If not by the end of the day, we're still talking about expecting a resolution within the next day or so. It was a strange process to get here, though. In retrospect, we really don't know why Nancy Pelosi left town and had the House continue with their week-long recess. We also don't know, though, why Mitch McConnell didn't involve Pelosi or Schumer in these negotiations that were happening between the Senate and the Trump administration. So the usual way they go about this is get the absolute top lawmakers and a representative from the administration in a room and see what they can hash out. This was a very different process for a couple different reasons, and now we're seeing things sort of drag along at a slower pace than a lot of people wanted.
Jack Fitzpatrick's on the line. He's Bloomberg Government Congress reporter. We have a minute left. He's been all over the story, but I got to ask this question. I mean, there's grandstanding, there's political talking points, but this is reality. Do they understand? Does McConnell, Schumer, Pelosi, Mnuchin, do they get that people are literally running out of money? Do they get that?
Yes, they get that.
Because it doesn't feel like it.
It feels like they haven't totally changed their usual process. There is the grandstanding that we would usually see. Clearly, they are trying to take really significant action, and they understand the severity. But on the Hill, we really have been wondering why things have been somewhat business as usual.
It shouldn't be. Jack Fitzpatrick, keep up the great work. Bloomberg Government Congress reporter, thanks for checking in. Coming up on Bloomberg Business Week with Carol Masser and Jason Kelly. They've got it all covered as well. I'm Kevin.
As a Bloomberg Pursuits look at luxury. It's not just toilet paper and bottled water filling the nation's sanitized shopping carts. Americans are stocking up on champagne and other indulgences also at rates approaching Christmas and New Year's Eve levels. Chocolate, ice cream, popcorn, potato chip sales jumped for the week ending March 7th, according to data tracker Nielsen. Pastry purchases soared by more than 18%. All those figures are poised to accelerate in coming weeks. A good steak lets consumers feel secure, says the North American Meat Institute CEO. Meanwhile, what do racehorses, stocks, oil, and silver have in common? They're all crashing. The month-long wipeout in financial asset prices has extended into the thoroughbred world. The annual two-day Ocala Breeders' Auction in Florida saw the highest price just hit $650,000. That is a drop of 68% from the $2 million that was doled out on a 2-year-old colt last year. Visit BloombergPursuits.com for more. I'm Andrew O'Day, Bloomberg Radio.
There are times when you have to go it alone, but these should not be those times.
With a medical crisis, can any other central bank execute?
Bloomberg Surveillance with Tom Keene and Jonathan Farrell.
Walk me through the dynamics that are going to shape the euro in the coming months.
Weekday mornings at 7 Eastern.
Do we have the ability to coordinate with this virus?
On Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com.
When things move this quick, do things break?
Bloomberg, the world is listening.
Hi, I'm Danica Patrick. Watching my nieces grow, play, and learn is amazing, but not every child gets to be carefree. 1 in 6 kids in the U.S. are hungry. This breaks my heart, and it's something that Feeding America is working to change. Each year, the Feeding America network of food banks rescues billions of pounds of good food that would have gone to waste and gives it to families in need. To help, visit feedingamerica.org.
Brought to you by Feeding America and the Ad Council. Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
From the financial capital of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Fast-moving markets looking at a turnaround for NASDAQ right now, higher by 51 points, up 0.8%. Both the Dow and the S&P, they are lower off their session lows. 23-point drop right now in the S&P, down 1% at 2282. Dow Jones Industrial Average is also moving lower, down 197 points right now. That is a drop of 1%. 10-year up 29.30 seconds. The yield on the 10-year is 0.75%. Bottom line, stocks sinking further as investors await progress on a congressional spending package to tackle the fallout from the coronavirus pandemic. Federal Reserve, though, announcing a massive second wave of initiatives to support a shuttered American economy. Gold surging 3.3%, up $50 the ounce at $15.48. West Texas Intermediate crude is down 0.2% right now, $22.59 a barrel. Again, the 10-year, the yield there, 0.75%. Netflix shares upgraded to outperform from neutral at Baird, which says the video streaming company should be, quote, a key beneficiary as the coronavirus drives more people to drop their traditional cable TV or satellite services. Netflix shares, they're surging today, up by 9.3%. Among the financial stocks, JP Morgan Chase down 2.9%, Citigroup down 5%, Bank of America right now lower by 4.95%. Again, recapping the Dow, the S&P, and NASDAQ all declining, with the S&P down by 28 points, a drop right now of 1.3%. 102 on Wall Street. Time now for the Market Drivers Report with a focus on American depository receipts. And here is Dave Wilson.
Thanks, Charlie. ADRs are lower, though not as much as U.S. shares. The S&P ADR index is down 0.3%, and the S&P 500 is now down 1.4%. ADRs of India's banks are lower after much of the country was placed on lockdown in response to the coronavirus outbreak. HDFC Bank has fallen almost 16% in U.S. trading, and ICICI Bank has lost about 12.5%. UK retailer Marks & Spencer has dropped 13% after Prime Minister Boris Johnson said tougher measures may be in store to contain the virus. Johnson raised the possibility that the UK might go on lockdown. Royal Dutch Shell Group's Class A ADRs have risen 6.7%. The UK energy producer scrapped a round of stock buybacks and said it would reduce operating costs and capital spending. Shell said the cuts may be as much as $9 billion. The company also has Class B ADRs, and they're up 4.5%. France's Total has gained more than 13%. The oil and gas company also halted share repurchases and scaled back capital spending, along with targeting more operating cost cuts. Those moves are designed to save about $5 billion this year, Charlie.
And we thank you very much, Dave Wilson, keeping track of those American depository receipts. Again, recapping here. Stocks, they are trading mixed. A 17-point jump for NASDAQ now, giving up earlier losses, up by 0.3%. S&P up, down 33 points, down by 1.4%. Dow Industrials down 282 points. That is a drop of 1.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
This is Balance of Power.
We have the strongest economy by far in the world.
We need an economy that works for everybody.
I am the one who has the broadest coalition.
Where the world of politics meets the world of business.
They've got the money they need to run a very competitive race.
These lawyers brought the case, and in my view, they should be sanctioned. We want certainty in the markets. We want certainty in our trading relationships.
The administration is trying to create a new divided world.
Balance of Power with David Weston on Bloomberg Radio.
From the Bloomberg Interactive Brokers Studio, welcome to our second hour of Balance of Power. I'm Paul Sweeney, sitting in for David Weston. What another crazy day in the marketplaces, as Charlie Pellet was just reporting. Kind of a mixed day in the equity markets. NASDAQ up slightly, but the S&P and Dow down about 1.5%. We had the Fed Act this morning, brought out the second barrel of the bazooka, QE Unlimited, I guess we can call it now. all eyes focus on the halls of Congress. What kind of fiscal stimulus can we get from Congress here as the world battles the coronavirus? We should get that some details of that very soon. Right now, let's start with Mark Hamrick. Mark is a senior economic analyst for Bankrate. Great time to get Mark on and get his thoughts on just what's happening in the markets today. Mark, thanks so much for joining us. First, love to get your thoughts on kind of what we saw from the Federal Reserve this morning at 8 a.m.
Well, any amounts needed, right? We know that essentially the Fed's now saying that they will write a blank check and that it will basically try to supply the liquidity in the financial system and then essentially the economy that's needed. And I think that that's obviously a welcome sign. I think obviously the next step is we do need to see the fiscal authorities do their job, meaning members of Congress and ultimately the president. And it does appear that they're making some progress. Just listening to Mitch McConnell and Chuck Schumer just a few minutes ago on the Senate floor. So negotiations are continuing, but this definitely has a sense of deja vu reminiscent of the financial crisis when those of us who were paying close attention at that time remember that the TARP measure, Troubled Asset Relief Fund measure, failed to pass. As I recall, the Dow lost about 1,000 points when it was at a substantially lower level back then. And we were wondering whether partisanship could be pushed aside. And because of the calamitous showing in the financial markets, the stock market at that time, elected leaders did put aside their political differences. But, Paul, one thing I do think about, and, we're in the midst of this right now, and we're all anxious for the health aspect of this to relent so that the economic aspect can begin to heal as well. I think that, we're watching history unfold very rapidly here, and we think about how there was political fallout from the New Deal. There was political fallout from the 08-09 situation. And, I just think we can't even imagine what the political fallout is going to be from this. And it's probably going to play out for decades to come, much the same as those episodes did as well.
Absolutely. I think the markets are certainly telling Congress that they need to get moving on it very quickly. As Jonathan Farrow this morning was speaking with Elizabeth Warren, got that point across very clearly. Mark, assuming we do get something today, give us your sense of what you think the economic fiscal stimulus plan really should include and maybe focus on initially.
Well, I think it should focus on, and I think it intends to focus on, keeping businesses in America solvent. And so, to be able to help these small businesses make their payroll over the time being, to keep those workers on the job. And obviously, there's going to be relief for major industries such as the airlines and I guess lodging as well, perhaps the cruise ship industry. This is sort of round 3 of the legislative process here. The first one being the $8.3 billion that was meant to fund the healthcare apparatus in our country, and then the one that passed about a week ago. And I don't think that we'll be finished yet because obviously, it's a little like legislative whack-a-mole. You knock one down and then another head pops up. And so it'll be important for Congress to remain alert and functioning. We're worried about the ability to vote remotely if indeed that arises, because obviously with Senator Paul now having the virus, a lot of handshaking on Capitol Hill typically. So we can only imagine what the risk is to other elected leaders. But I think the main thing is that trying to learn a lesson from the political fallout from 08-09 is that everyday Americans can't be overlooked when they are the ones right now suffering as much as anyone. And that was the sense that people had, rightly or wrongly, from that earlier episode was, you're rescuing the banks, you're rescuing the automakers. Right. We know why those steps were taken, but many Americans felt like they were left out of that. And Sheila Bair, the former FDIC chair, who was part of those discussions, has very much enunciated that concern, even recently, that we can't make those same, you might say, either economic or political mistakes again.
So, Mark, over the weekend, we've seen a lot of the Wall Street investment banks come out with, I guess, their best they can guess economic forecast for 2020. And what I'm noticing is, obviously a deep contraction in the second quarter. Some is, 20 to 30%. But most of them, I'm thinking about the Goldman Sachs report, have sharp recoveries in GDP growth in the U.S. in the third and fourth quarter, suggesting kind of a V-shaped recovery. How do you think this might play out?
I think we need to be cautious. I think that, we want to be optimistic, but at the same time, reasonable. We are now essentially collectively in the emergency room of this crisis, both from a health standpoint and an economic standpoint, and we don't know how the patient's going to emerge. And that's why I think there is this sense of urgency that Congress does need to act ASAP. I think that we can hope for a sharp recovery, but I do worry that some of those forecasts might be overly optimistic because, frankly, we haven't been through this before in any shape, form, or fashion. There was a science fiction film that came out with Michael Rennie when I was a kid, The Day the Earth Stood Still. That seemed like a far-off notion. We've now had essentially the Earth standing still in some ways for multiple days now, and obviously with that, we're taking a bite out of GDP each successive day.
Very good. Mark Hamrick, thanks so much for joining us. We always appreciate your opinion here as we parse through some of the financial and economic news just gushing across the Bloomberg terminal right now. Mark Hamrick, Senior Economic Analyst for Bankrate, joining us. Looking at the markets here, continue to be down. We have both the S&P and Dow down about 1.3, 1.4% respectively. NASDAQ clinging on to a gain, but they're off the lows of the day. So as we're getting a clear indication from the Fed how aggressive it will be in terms of maintaining liquidity in the marketplaces, that's a lesson that was learned clearly in a financial crisis, and I think the Fed is using its playbook to the fullest extent possible here. Now the focus turns to Congress. We are expecting Congress to vote approximately 1:30 p.m. Wall Street time today on their measurement, on their bill. We'll see how that plays out. Coming up, we're going to speak with a doctor from the University of Texas Health Center on what people should be doing to stay safe and how long it will take to see results. This is Bloomberg.
If you promise to cover the latest financial and business news from Asia,
we're talking about social enterprises in Asian countries
with expert analysts who really understand Asia.
Aren't you encouraged with respect to U.S.-China trade?
Then you must be us.
Tell us about the trend within this part of the world.
Bloomberg Daybreak Asia.
What sort of fiscal stimulus do you think we'll see?
Tonight at 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
When you went car shopping, you meant business. You aced vehicle history searches and test drives. You out-salesmaned the salesman. Now you've got your wheels. If you manage that, you can get your retirement plan on track. Visiting aceyourretirement.org can help. With 401k tips and smart saving strategies, you'll have the info you need to get more for your future. Go to aceyourretirement.org, because when it comes to speeding past financial challenges, you're an ace. Brought to you by AARP and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
Ladies and gentlemen, we have arrived in Philadelphia. Local time is 3:05 p.m. and the temperature is 67 degrees. At this time, you are now free to use your cellular devices.
You know that feeling when you get to turn your phone on after the plane lands? You can have that feeling every time you drive. Make sure your cell phone is stowed away whenever you are behind the wheel.
Visit StopTextStopWrecks.org. A message brought to you by the National Highway Traffic Safety Administration, Project Yellow Light, and the Ad Council.
Yo, look at this, look at this. What do you reckon? Should I swipe right? Yo, check this out, check this out, check this out. Yo, bro. Hey, look at this. Yo, look at this, look at this. Should I swipe right? Hey, look at this, look at this. Yo, bro, check this out, check this out. Should I swipe right? Check this out. I'm for me, rainbows.
Oi, get your phone out my face. I'm trying to drive.
Sorry, mate. Your mate's more likely to crash with passengers in the car. So don't drive him to distraction. Let a mate concentrate.
Dave presents an evening of exclusive stand-up comedy in association with Calm, featuring Joel Dommett.
I was like, Dad, do you love my brother more than me? He went, just more in common with him.
Kiri Pritchard McLean.
They're either holding an ugly baby or a heavy fish. I don't know why it's those two.
Judy Love.
Where's all my big girls? Okay, some of you be lying to yourself.
And John Robbins.
Never got my head round why 100% humidity wasn't water.
An exclusive stand-up special. Comedy Against Living Miserably. Tomorrow at 9 on Dave.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app and see the latest editions under the Your New Episode section. Happy listening.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
There are everyday actions to help prevent the spread of respiratory diseases. Wash your hands. Avoid close contact with people who are sick. Avoid touching your eyes, nose, and mouth. Stay home when you are sick. Cover your cough or sneeze. Clean and disinfect frequently touched objects with household cleaning spray. For more information, visit cdc.gov/COVID-19. This message brought to you by the National Association of Broadcasters and this station.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
Are you interested in a challenging and exciting career? One where you can be part of solving complex challenges across industries and geographies? Bloomberg's ever-expanding technology, data, news, and media services foster innovation, empower clients, and offer nearly limitless opportunities for career growth. Visit Bloomberg.com/careers today to view our current job opportunities. Bloomberg LP is an equal opportunity employer. The address once again is Bloomberg.com/careers.
Imagine being denied an apartment because of your religion, or your race, or because you have children, or a disability.
It's so wrong.
Yes, but who has the power to stop this?
You do. Each of us has the power. The law is on your side. It's illegal for landlords to discriminate because of race, color, religion, sex, national origin, disability, or familial status. If you suspect that you have experienced housing discrimination, file a complaint with HUD immediately so we can investigate it. Fair housing is your right.
Use it.
To learn more, visit HUD.gov/fairhousing. That's HUD.gov/fairhousing. Or call 1-800-669-9777. 1-800-669-9777. A public service message from HUD in partnership with the National Fair Housing Alliance.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. U.S. stocks well off their session lows. Still a mixed Monday here with the Dow, the S&P. They're both lower. NASDAQ is higher. The 10-year up 30 seconds. The yield on the 10-year now 0.74%. The Dow down 185. That is a drop of 1%. S&P is down 22, lower now by by 1%. NASDAQ higher, reversing earlier losses, up 55. That is a gain of 0.8%. Stocks are paring losses as investors await progress on a congressional spending package to blunt the fallout from the coronavirus pandemic. We've got you covered out of Washington. Stay with Bloomberg for any latest developments. Measures of corporate credit risk eased after the Federal Reserve announced a massive second wave of initiatives to support a shuttered U.S. economy. S&P did fall as much as 4.9% before bouncing back after lawmakers failed to agree on a stimulus bill over the weekend. Tech shares outperforming again, recapping here. NASDAQ up 56, up 0.8%. S&P down 21, a drop there of 0.9%. The Dow down 216, a drop of 1.1%. Gold up 3.4%, 15.56 the ounce. West Texas Intermediate crude just turning higher, little change. WTI 0.3%, right now 22.71 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie. From the Bloomberg Interactive Brokers Studio, I'm Paul Sweeney. Well, the term that has come into our vernacular that is not likely to leave it soon is social distancing, keeping the distance from each other to slow down the spread of the coronavirus. What else should we be doing? For that, we welcome Dr. Pauline Rosenow. She's a professor emeritus at the University of Texas Health Center School of Public Health in Houston. Dr. Rosenow, thanks so much for joining us. So from a medicinal perspective, what should people be doing? What really are best practices? What have we learned?
We already know. Stay safe, stay home, work from home, keep your kids close. Don't get online and believe any of that information that's intuitive. Look for the science. Look for the really strong medical information that's coming from people that have evidence and scientific basis to what they're posting. And there's so much junk out there that will tell you to do things like sip a little honey in water that will not kill the virus. Don't do it. If you're sick, call your doctor. Be sure you know what the symptoms are. If you start having a fever, stay away from other people. If that's the most important thing. If you have a dry cough, that's critical to get emergency medicine. Don't bother your doctor if it's just a simple cold. You've got to be sure you know what you're doing, and you've got to know how to take care of yourself, because it'll be a while before they get to you. Good information on things like the Mayo Clinic, which is scientific. For what you do with your daily life, stuck in your house with your kids, there's people who have done this, and they've been isolated, like Scott Kelly, the astronaut. He's got a fantastic set of things that you can do to make your day profitable, productive, and healthful. Go to his webpage. It's all over the place. Everybody's just Google Scott Kelly. He says, really, the most important thing is to set up a routine every day. Get your sleep as you always do. Go to bed at the same time. Get up at the same time. Have your routine. When it's safe, go outside. Don't walk in groups. Don't get too close to other people. Look at the greenery. Take a walk in the woods if you've got one, in a park if you don't. Leave your shoes at the door. This coronavirus, we now know, first evidence and research that's in, drops to the ground. That means leave your shoes at the door. Don't bring the virus inside into your home on your shoes. If you've got kids and they're playing on the floor, that's especially important.
Right.
And find things for your kids to do. There's good websites. PBS has some great programs that are educational. Your school system, they may have some special things for your kids to do while they're home.
Right.
Listen to your public health authorities.
So, Dr. Rosenow, given your background, given what we know from other parts of the world, what is your sense of when we might see peak infections, peak cases here in the United States?
I think it will vary by state. There's no way of really predicting it. If we look to the experience, and a lot of the CDC and WHO people are doing exactly that, I think there's a thought that when the weather gets warmer, the virus will recede. Doesn't mean it won't be back next year, but it'll give us a break to go back to normality for a little while, give the researchers a chance to develop that vaccine that we so desperately need, and to develop some treatments, because there's no treatment now.
What do you think is let's put it this way, do you think that there will be a vaccine at some point? Is this a type of virus that we have some experience with, and it's just a question of time before the researchers do find a vaccine?
I think that's a realistic hope. But the timeline is another question, and we just have to wait and see. There's no certainty right now.
How about some of the existing, I know there's been some treatments for malaria, for example. I know they're working on some cocktails, perhaps. Any of those, seem reasonable to you?
Some are promising, but it would be premature to start assuming that they're going to work before we have a chance to test them, and that will take time. And it's not around the corner. It's going to take more than several months.
Very good. Dr. Pauline Rosenau, thank you very much for joining us. Dr. Rosenau is a professor emeritus at the University of Texas Health Science Center School of Public Health in Houston, Texas, giving us her thoughts, giving us the kind of what I think we've all come to learn now, however begrudgingly, about the social distancing and just the good oral hygiene as it relates to kind of trying to slow down the growth or the expansion of this virus. I saw some news across the Bloomberg that the city of Milan in Italy, which has been right in the center of it within Italy, they believe they will soon see the cases peaking there, which would be great news for them because they've been brutally hard hit there. So looking at the markets here, still mixed here, I would call it still, but the S&P and the Dow down about 1.3%. It's been a volatile ride here in the stock markets as we've come to experience over the last few weeks. That's continuing today. That's offset a little bit by NASDAQ. NASDAQ up about 0.5% here, 31 points. That puts it at 69.10 on the NASDAQ. People obviously looking for some of those stronger growth names in technology, maybe benefiting from China getting back to work, maybe helping out the supply chain, that tech supply chain that is so dependent upon China and Southeast Asia in general. Looking at the treasuries, 10-year treasury up 27 seconds, pushing 10-year yield down to 0.75. Had been a little bit lower earlier, 30 years at 1.35%. Looking at WTI crude, it's been so volatile over the last few weeks with the supply and demand issues out there weighing on crude. It's kind of flat here today at $22.61 a barrel. Coming up, we're going to have more on this, on the corona crisis. We're also going to take a look at some of the market issues driving and what we can get out of Congress.
This is a Bloomberg Money Minute. U.S. stocks are fluctuating as investors await progress on a congressional spending package to blunt the fallout from the coronavirus pandemic. The Dow is down 295 points, S&P down 34, the NASDAQ is up 12 points. But for the first time since 2001, gasoline futures hit 50 cents a gallon on the NYMEX. The coronavirus has put a big dent in demand for transportation fuels. Gasoline futures have lost 70% of their values since the beginning of the year. The Federal Reserve is working to pump more money into the economy to try to cushion the effects of COVID-19. The central bank is putting no limits on the amount of bonds it'll buy to keep borrowing costs low. And it's setting up programs to ensure companies and state and local governments can borrow if they need it. Donna Wilson, Bloomberg Radio.
Hi, it's Olivia Munn with my shelter pets, Frankie and Chance. Say hi, guys. When I adopted them, I discovered that they both have incredible personalities. Chance's sole purpose in life is to love and to be loved. Frankie is a little bit of a scoundrel and always entertaining. They're a little bit of a lot of things, but they're all pure love. Adopt pure love at theshelterpetproject.org. Brought to you by the Ad Council, the Humane Society of the United States, and Maddie's Fund.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions. The market's in focus every business day.
The happy family of 3 were about to welcome a new member. That's right, they were finally getting a dog.
Buy on eBay, dog bed from £12.
First, they had to make a few adjustments.
Sell white rug.
And prepare the kids for the reality of owning a pet.
Buy biodegradable poop bags from under £6.
Everyone instantly fell in love with Little Rocky. Unfortunately, Little Rocky fell in love with a cushion. Buy, sell, eBay.
Delivery costs may apply.
So you run into a competitor at an industry event. You get to chatting about business. How are you both doing? All pretty standard. Then someone mentions prices. Maybe you agree to stop undercutting each other. Still just business, right? Wrong. Coordinating prices with your competitors is called price fixing. It's cheating and illegal, and you could be facing big fines or even prison when you get caught. Search cheating or competing to check your business practices before we check them for you. Brought to you by the CMA, the Competition and Markets Authority.
This ad is made from 100% recycled commercials, just like Smart Water's
all new
bottles are made from
100% recycled
plastic.
What's that number again?
100%. Every Smart Water bottle is made using recycled plastic, and because it's still
100%
recyclable, the plastic will be used again
and again.
Smart Water, now in a 100% recycled plastic bottle. Label and cap 100% recyclable, but not made from recycled plastic. Yet. We're working on it.
Imagine winning 10 grand.
Yes!
With Set for Life, you could win 10 grand every month for 30 years.
Get in! Amazing! Woo! Yes! Sweet! Unbelievable!
Play Monday, and you could make every month amazing with Set for Life from the National Lottery. Your numbers make amazing happen. Prize may be capped. Rules, procedures, and game-specific rules apply. Players must be 16 or over.
Did you know your favorite radio stations are in your pocket? Yes, the TuneIn app lets you listen to the same radio stations you pick up on your home or car radio anywhere you want. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119 and around the globe. The Bloomberg Business app and BloombergRadio.com. This is Balance of Power with David Weston.
Hi, I'm Paul Sweeney, sitting in for David Weston. Coming up, Cameron Christ, Bloomberg macro strategist. We're going to ask Cameron what he wants to see in a bill coming out of Congress. We expect some action on it this afternoon. But first, let's go to Charlie Pellet for Bloomberg Business Flash. Charlie, what do you have?
All right, thank you very much, Paul Sweeney. Fast-moving markets is what I've got for you and our listeners. We've got you covered on Bloomberg Radio. Got to stick with us right through the close on this Monday. And, of course, how will those Asian markets react tonight? This update brought to you by New Jersey Institute of Technology, transforming computing professionals into data scientists to meet demand in this fast-growing field. More at njit.edu/Jersey City. Here's where we stand. I'll give you the why in just a moment. Let's get right to the numbers, though. With the S&P down 53, a drop now of 2.3%. The Dow is down 448 points, lower by 2.4%. NASDAQ is down 31, a drop now of 0.5%. 10-year up 31 seconds with a yield of 0.74%. Gold up 4%, higher by $59 the ounce at $15.58. And West Texas Intermediate crude oil, little change, lower now by 4 cents a barrel, down 0.2%. WTI at $22.59. Stocks have paired losses as investors await progress on a congressional spending package to blunt the fallout from the coronavirus pandemic. We will have the latest developments from Washington if and when they become available. Meanwhile, the Federal Reserve is announcing a massive second wave of initiatives to support a shuttered American economy. Recapping on stocks lower across the board with the S&P down 49, lower by 2.1%. Again, the 10-year, the yield there 0.74%. Gold up 4%, now $15.57 the ounce. I'm Charlie Pelleton. That, Paul Sweeney, is a Bloomberg Business Flash.
Thank you very much, Charlie Pellet. I appreciate that. I'm Paul Sweeney, sitting in for David Weston here on Balance of Power. Well, we had the Fed certainly step up to the plate, if you will, this morning, once again, cranking up some quantitative easing, and now the focus returns to the halls of Congress, waiting for fiscal stimulus plan. Markets are all over the place trying to parse through all this information. Cameron Kreis, Bloomberg macro strategist, joins us here. So, Cameron, let's start with the Fed. 8 a.m. this morning, big announcement. What's your key takeaways?
Yeah, I mean, I think they're watching the same headlines we are, and life moves pretty fast. And credit to them, they are as well. I mean, one of the missing links of what they have done heretofore has been in the credit market, which has been obviously in the headlines and has been deteriorating markedly. So the fact that they are now going to essentially fund or lend to some special purpose vehicles that will be able to buy credit, investment grade credit at least, it should exert some sort of stabilization in the credit markets, which I think you could argue is a necessary but not sufficient condition for equity markets to sort of settle down as well.
So, Cameron, it's, a little bit of a lift in the markets earlier today, but that's kind of waned here. So, again, kind of putting the focus back on Congress, back on fiscal stimulus, where it's really been for the last week or so. What do you think the markets really need to see coming out of Washington?
A yes vote.
A yes vote.
I mean, that's a bit of a flippant answer, but
yep.
I think it's very much a case that as the saying goes, the perfect is the enemy of the good. We don't need to see a perfect package. We need to see action, and I think there's a real sense of frustration that rightly or wrongly, the perception is that all these people are still playing politics a little bit. And sort of the ideal would be lock them all in a room. No food, no toilet breaks. You can come out when you pass something. And I think there's that. I mean, I'm being a little flippant, but I think there's an element of truth to that.
What do you think? I mean, I guess some of the key issues are just simply, there's many issues, obviously very complex, but a couple of the key things are how much of the support, the relief goes to individuals versus how much goes to corporations. Based upon what we saw back in the financial crisis, how do you think that's likely to play out?
Well, for better, I'm not sure if the financial crisis is the perfect analog because, this is sort of unprecedented what we're observing now. I think for choice, personally, I would prefer to see more of the package go to individuals because they don't have recourse to issue bonds that the Fed can buy, or what have you. Obviously, it's not good systemically to have a wave of bankruptcies from large corporations, but by the same token, they are better placed, I think, to benefit from some of the other measures, such as the Fed has unleashed. Whereas individuals, if you're sitting there not being able to go to work and not getting paid, you can't call up your banker at J.P. Morgan or Goldman and say, I've got some stuff under the sofa cushion that I can tender to the Fed as collateral for a loan. It doesn't work that way. For better or for worse, you need something. You need direct monetary grant from the government sooner rather than later.
So, Cameron, over the weekend and over the past few days, we've all seen the economic forecast coming out of the Wall Street banks, and the second quarter obviously going to be really, really down quarter, historic levels. It's just a question: is it 20%? Is it 30%? But what most of the forecasts have is a fairly quick recovery. I'm thinking about the Goldman Sachs in particular, 14% growth in the third quarter. I think 10% in the fourth quarter. Kind of suggesting to me a V type of recovery. Do you think that's kind of in the cards?
I think it's a very binary question. If the fiscal authorities can keep small businesses afloat during this lockdown period, then I think that's got to be the base case. Because either they're shut now, and if they survive, then once the lockdowns end, they're open again. And there will be pent-up demand to avail themselves of their services. I mean, I need a haircut,
Yep.
type of thing. unfortunately, if a lot of these businesses go to the wall, then they won't reopen, and the consequent bounce will be much limper. But I think it's going to be very difficult to fall this far and not have some sort of bounce once there's a reopening. The question is everyone going to be around to participate?
Right, exactly. So as you think about it, I mean, the Fed has done essentially all it can, right? I mean, is there anything left in their toolbox other than maybe just more buying?
Well, they alluded to something that we don't have the details yet for, which would be alluded to sort of direct lending to small business. Now, that would be another positive step, although it's not a panacea. If you operate a pizza restaurant and you have to shut down for 2 months, yes, you can borrow money to sort of pay your rent and pay your other bills and whatever, but you don't have the revenues that you've foregone are gone, right? They're lost forever. So you still, even once you reopen, you still have to pay the loan back now. So you still have this obligation that you wouldn't have had previously. Now, in the fiscal package, I believe there is some notion of extending loans to small businesses, which, if they retain their workers, would then just become grants, i.e., a subsidy or a giveaway, which would essentially replace the revenues that have been lost. But even there's still this regulatory issue where in some states, for workers to claim unemployment insurance, they need to be formally let go. Other states, that's not the case. So, sort of cleaning up those regulations would be extraordinarily useful to let small businesses furlough employees, not have to officially sack them, but allow those employees to avail themselves of the safety net. Is an obvious thing to do, and let's hope our elected leaders, in their infinite wisdom, choose to do so.
Got it. Real quick, just Cameron, lastly, are you sensing any capitulation here or bottom feeding or anything to suggest that we might be getting close?
Well, I would say this. I would say it certainly appears that the market in the equity space is willing to have a look at buying a few things. As we're speaking, the NASDAQ, the NDX are still slightly green. So that's, I suppose that's a positive. I would say, however, that broadly speaking, I suspect there's still some more downside to all of this. What the response that we've had thus far should do is to sort of dampen the volatility by ensuring that the plumbing works and that markets are functioning accurately. But the idea that we can fully discount and accurately discount the hit to earnings and the hit to the economy before we've even had a single data point, I think it strikes me as a little optimistic.
Cameron Christ, thanks so much for joining us. We appreciate your perspective. Cameron Christ is the chief macro strategist for Bloomberg. We appreciate his thoughts. Right now, we're waiting on some procedural votes on the floors of Congress as it relates to this fiscal stimulus bill. To get the latest, we're going to welcome Jack Fitzpatrick. He's a Bloomberg Government Congress reporter. Jack, thanks so much for joining us. Tell us what's going on in Congress right now.
Yeah, so the Senate is actually voting now on a procedural vote that Democrats have said they'll oppose because there's no deal. This is the second time McConnell has moved to this vote, blaming Democrats for holding it up. There are debates over this Republican bill's restrictions on money that would offer loans or loan-like agreements to companies that need it, like airlines. There's still a debate over how much money they can provide to hospitals and the overall ramping up of healthcare capacity. And meanwhile, Nancy Pelosi is preparing to release her own competing bill that addresses some of those wants that Democrats have and throws in some other things like $40 billion for universities that have had some financial struggles continuing to operate, moving online. There's going to be some measures in her bill on elections, making sure people people can vote by mail. So we still have a little bit of a ways to go, clearly, because we're seeing a competing vision from Senate Republicans and House Democrats, although Chuck Schumer has continued to say he thinks there could be a deal today.
So, Jack, I don't know if you saw John Farrow's interview with Senator Elizabeth Warren earlier this morning, but he really, really aggressively pushed across the need for Congress to get into a room and get something done. Does Congress, asking the senators, Congress really understand how difficult things are out there and how important it is for them to act? What do you, this is just frustrating to watch. What do you think Congress really knows that they have to get something done now?
That's an interesting question. In terms of the substance of what they're talking about, maybe the answer is yes, because they've been treating this, making comparisons to the response to 9/11, talking about, preparing for a depression-level event in terms of the stuff they're trying to get into this bill. But in terms of the process, this really is maybe a little faster than usual, but largely business as usual. There's some political grandstanding. They didn't start out by getting the top negotiators, including Nancy Pelosi, in a room and hashing this out quickly. Senate Republicans wanted to do a Senate and White House deal and essentially kind of nudged Pelosi out of the way. Now we're seeing a back and forth that we would see. You'd expect to see this for something less urgent. So the process really has been more frustrating than a lot of lawmakers wanted to see. They wanted to see something much faster, even though when we do see a deal, it is going to be the largest economic relief package we've ever seen in the U.S. So it's going to be something really significant.
All right, I guess just the nuts and bolts here, kind of timing-wise, I guess Chuck Schumer, as you mentioned earlier, thinks they can get something done today. If it's not today, are we talking about a day or two, or is this something that could even drag on into next week, for example?
Well, there would be a panic among these lawmakers if it dragged on much longer. Everything I've heard from the lawmakers and staffers that I've talked to are, if we can't get it done today, it's got to be very, very soon. It does raise some questions, though. If they get a deal, there's a delay in terms of getting bullet points turned into legislative language. They would have to take a vote in the Senate. Pelosi's got to round up support in the House. I don't know how long it would actually take to get to the president's desk. And at this point, when you hear people like Stephen Mnuchin talking about cutting checks or doing direct deposits in early April, that could be very, very difficult. But as far as getting a handshake agreement and really turning this into legislation that they can pass as quickly as they can, we could see developments very soon. It could be today, it could be tomorrow. That's the time frame they're talking about for that.
Is this something that we would expect follow-on bills after this, even though this will be a huge bill?
I've asked about that, and I keep hearing the focus is on this bill. Eric Ueland, the White House legislative director, I asked him specifically that, and he said, we're not focused on the Phase 4 bill. This is the Phase 3 bill that we want to try to get everything into. But a lot of lawmakers are saying, yeah, there's going to be a Phase 4 bill. This is enough of a significant economic event so that you've got people talking about a long-term kind of rebuilding major infrastructure package. There could be a fourth bill. There could be a fifth bill. The response is going to take a long time, but you're right to say this is a massive bill they're working on. And as for right now, they're focusing on this being effectively the last train to leave the station for everybody's ideas, at least in the near future.
Jack, thanks so much for joining us. We appreciate your perspective on Congress as we await some fiscal legislation to come out of the halls of Congress. They are working on it today. Chuck Schumer, again, said perhaps get something out tonight as well. Jack Fitzpatrick covers the Congress for Bloomberg News. Right now, let's get a data check and a business flash with Charlie Pellet. Charlie.
All right. I thank you very much, Paul Sweeney. Here's what's going on. We have got the Dow, the S&P, and NASDAQ all moving lower right now. Stocks were higher. At least NASDAQ did turn into the green about 20 minutes ago. Right now, looking at a loss for the NASDAQ Composite Index, it is down now by just about 9 points. That is a drop of 0.1%. The Dow Jones Industrial Average tumbling 399 points, lower now by 2.1%. S&P 500 Index, it is down by 47 points, a drop there of 2%. We've got the 10-year, the yield there, 0.74%. Gold, meanwhile, up 4.1%, $15.60 the ounce. West Texas Intermediate crude oil, it is down now by 1.5%. $22.30 for a barrel of West Texas Intermediate crude. Among the stocks that we're following this morning, General Electric's aviation division cutting 10% of its U.S. workforce as the coronavirus outbreak saps demand for commercial air travel and upends the global economy. Shares of General Electric slumping now by 5.5%. Boeing says it will temporarily shutter its Seattle area factories, adding to a wave of plant closings sweeping the globe and compounding hurdles for a company already reeling from the grounding of its top-selling plane. Boeing shares, they are trading higher right now. Boeing, a member of the Dow Jones Industrial Average, Boeing up now by 12.4%. Crude oil down 1.2% right now. Barrel of West Texas Intermediate crude down at $22.39 a barrel, lower now by 25 cents. Again, recapping here, fast-moving markets. Nasdaq just turning around, up 22 points, up 0.3%. S&P down 35, down 1.5%. The Dow also down 1.5% now, lower by 279 points. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Charlie Pellet, thank you so much. We appreciate it. As Charlie was just reporting, Boeing temporarily shutting down its Washington State Puget Sound plant for 2 weeks. We've seen job losses begin to mount. We're going to get some job numbers later in the week, sure to be ugly. The question is, how bad will the second quarter be? And then the second question is, how quickly can the U.S. and global economies recover on the other side of this coronavirus? To check on that, we welcome Heidi Scherholz. She's our senior economist and director of policy at the Economic Policy Institute. Heidi, thanks so much for joining us. Again, I think the two questions that a lot of investors have as it relates to economic trends is, how bad will 2Q be? And then how quickly can the economy turn around? What are your thoughts?
I think that it's going to be really, really bad. So Goldman Sachs' most recent estimate was negative 24% in the second quarter. Morgan Stanley just came out with something this morning, I think, that has negative 30% in the second quarter. It will be an absolute unprecedented drop. We haven't run the numbers for the negative 30% second quarter, but the Goldman Sachs numbers that were just slightly less dire would still translate into 14 million jobs lost by summer.
Oh, Heidi, I'm sorry. I'm going to have to interrupt you, Heidi. We have New York's Governor Andrew Cuomo speaking at the Javits Center. We're going to go to that right now. Thank you.
We'll focus like a laser on the economy. We're even planning now, what do we do about the economy? But first order of business is we have to do everything we can to save lives, literally, and that's focusing on the healthcare system. I'm sorry, sure. Days from now, by any of the projection, we can handle the rate days from now. The immediate problem in New York City were the supplies, the masks, the gowns, etc. We've been working very hard to find and buy supplies all across the globe. I believe we have enough capacity for the entire state, including New York City, for the immediate future. But the main issue is we have 53,000 hospital beds. We are projecting a possible need of 110,000 beds. I've ordered today the hospitals that they must increase their capacity by 50%. If that all works, that takes us from 50,000 to about 75,000 beds. We still have a possible need of 110,000 beds. So we're not there on the beds. I'm less worried about the beds themselves. I'm more worried about the equipment, because many of these acute cases are going to need ventilators. And we need about 30,000 ventilators, and we can just not get them. And that's where we're going to need the federal government to step in and step up. I have said I think the federal government should use what's called the Federal Defense Procurement Act. where the president says to specific companies, I need you to produce this equipment. I need it now. Here's the date. Here's the numbers I need. Relying on voluntarism of corporations is great. And American corporations have stepped up to the plate. New York corporations have stepped up to the plate. But we can't manage this operation on an ad hoc basis of voluntarism by corporations. We should be ordering the specific equipment that we need and ordering corporations to produce it to the volume that we need. That is our limiting factor. Yes, we need hospital beds. Yes, we need staff. But most of all, we need the equipment. I'm sorry. Where do you go? We have hospitals that are operating in New York City. All hospitals have now been ordered to increase their capacity a minimum of 50%. I've asked them to try to find a way to increase their capacity 100%, right? We have 53,000 beds. If everybody increased it to 100%, you'd be at roughly the 110,000 goal. I don't believe it's reasonable or feasible to tell every hospital you have to double the goal, so we set a minimum of 50%. Those hospitals that are first over capacity, this will be a backfill facility where we can relieve some of the pressure and the tension from hospitals by using these beds. It is as serious as a matter of life and death. My advice would be act sooner and act more dramatically. Don't procrastinate. There'll be some people who say, oh, this is too dire. We don't want this level of disruption. It's not going to be that bad. This is media hype. They are wrong. They are wrong.
Questions talking about the state and the city's response to coronavirus.
We have enough supplies in-house today to make sure all health staff across the state have the right equipment. And again, we have been scrambling. We're buying from China. We're buying from all across the world. Can I say that we'll have enough equipment for next week, the week after? I can't say that. And that's out of our control, and that's where we need the federal government. Look, everyone has to do what they have to do. The states are in a position to manage certain activities. But the federal government has a set of capacities that we don't have in the state. I'm one of the senior governors in the United States. I know what a state can do. I was also in the federal government. I was a cabinet secretary. I did disasters and emergencies as a cabinet secretary. I know the capacity of the federal government. They have more capacity than the state. When it comes to securing medical equipment, ventilators, masks, gloves, they are in a much better position to do it. They legally have a tool called the Federal Defense Production Act. Use it. Have the materials made. To have states competing with other states to find these equipment, frankly, bidding against other states, driving the price up. Masks that we paid 85 cents for, we're now paying $7. Why? Because California is bidding, and Illinois is bidding, and Texas is bidding, and Florida is bidding. It makes no sense. The federal government must nationalize the equipment production and supply issue. We're getting the existing...
We've been listening to New York Governor Andrew Cuomo at a press conference at the Javits Center, reiterating some of the comments he's made this morning. A couple of things that really just jumped out at me. The need for New York State, 110,000 beds, 30,000 ventilators. That's the number that he is working towards. So making a national effort, a statewide effort to meet those needs. Looking at the markets right here, continue to be down about, on the S&P, down about 2.9%. The Dow is off about 2.8%. That's 540 points on the Dow. That puts the Dow at 18,638 on the Dow. NASDAQ down 63 points, 6,815. We're looking at the Treasuries up 1 full point on the 10-year. This is Bloomberg.
This is WBBR New York, WDCH-FM Bowie, Baltimore, Washington, WJZ-FM HD2 Catonsville, WRCA Watertown, WBOS HD2 Brookline, Boston, WNBP Newburyport, KNEW Oakland, KOSF 103.7 FM HD2 San Francisco, and SiriusXM Satellite Radio Channel 119. This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Messer and Jason Kelly on Bloomberg Radio.
And live from New York and New Jersey, you're listening to Bloomberg Business Week. It's a Monday edition. The market's bouncing around, monetary policy, the Fed taking another strong action, and now all eyes turn to the lawmakers on Capitol Hill to see if they can get the fiscal side done. In the meantime, let's get to the headlines in the business world. Welcome back, Charlie Pellet. Hi.
Thank you very much. Here's what's going on right now. We have got the Dow, the S&P, NASDAQ, steep losses again on this Monday. Fast-moving markets. Got to keep it locked into Bloomberg Radio for the latest on Bloomberg Business Week. Stay with us right through the 4 o'clock close on the East Coast. And, of course, we'll find out how those Asian markets react tonight. Let me give you the numbers first. I'll give you the story behind the numbers right now. S&P down 72. That is a drop of 3.2%. We've got the Dow lower by 620 now, a drop there of 3.2%. And NASDAQ down 77. That is a drop of 1.1%. Stocks paring losses as investors await progress on a congressional spending package to blunt the fallout from the coronavirus pandemic. The Federal Reserve, meanwhile, announcing a massive second wave of initiatives to support a shuttered U.S. economy. The 10-year up 28.30 seconds at yield 0.75%. Gold surging 3.9% right now, 15.57 the ounce. And West Texas Intermediate crude down 1.1%, 22.36 a barrel on West Texas Intermediate crude. So again, recapping here, stocks are selling off. We did see NASDAQ higher earlier in the session, but right now S&P down 72, a drop there of 3.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. You are listening to Bloomberg Business Week. Carol Master along with Jason Kelly. And as Jason mentioned at the top of the show, it's all about the Fed. They've acted, and now investors hoping U.S. lawmakers can get something done. You know, it's interesting, Jason, earlier I heard it's not about an economic stimulus plan, but an economic survival one. That's what's really going on right now, and that's what we need out of Congress. We're going to be talking about that. We're also going to talk about the healthcare system pushed to the extreme and whether healthcare workers need to be mandated to get shots. There's a lot going on in terms of the workers themselves being protected and also having the necessary PPE, the necessary equipment that they need, personal protection equipment that they've got and need to do their jobs, essentially.
Well, absolutely. And of course, investors trying to get it all squared away, looking at it from a bunch of different perspectives. We're going to look at it both from the equity side with Neil Hennessy, and obviously the credit markets have been a huge question mark. Carol, Dan Zwern, well known from Arena Investors. He's going to help us understand the credit side of things. And to wrap it up, this is going to make me feel better. You know it is.
I know. I'm looking forward to
Paul
Rabel, certainly a friend of the show and a frequent guest that we've had at Bloomberg Business Week. So looking forward to what he has to say, especially with the sports world really locked down at this moment. Interesting from a personal perspective what he has to say and also about what's going on. Having said that, we do have a headline that crossed the South African president setting a 3-week lockdown to fight the virus. And Jason, I think this is going to be one of the key stories, certainly over the next couple of weeks, and next week in particular, as these emerging markets, among them the biggest. We've seen what happened with China, but we're going to watch Africa. We're going to watch India in particular, where those folks are challenged sometimes just getting through on a day-to-day basis. So watching that as well. Let's set, if we can, the Bloomberg Business Week agenda.
Let's do it. Sarah Ponzak with us on the phone from New York City. Dave Wilson also joining us. He's in New Jersey, I believe. So, guys, wow. Dave Wilson, it feels like it's been a year since we talked to you. It was just on Friday. But what's the tone of the market today? How would you describe it?
Scattershot, really. I mean, it's kind of all over the place when you look at the indexes. And then when you kind of go through some of the stocks, you see the same thing. You look at the airlines. United's up almost 7% and American's down. And Boeing, which of course, depends on the airlines for much of its business, up 13% right now. So, I mean, you can do that same exercise with the casinos, with the cruise lines, with other areas most affected by the coronavirus, and it's a bit all over the place, not the sort of uniform moves that we have seen lately. And, one area that really jumped out in today's trade.
Dave, hang on for a second. The Virginia governor press conference on what's going on in his state with the virus. Let's listen in, everyone.
Matters everywhere. So essential businesses that remain open have a responsibility to adhere to social distancing recommendations. You need to step up sanitizing practices on common surfaces. You can find more workplace guidance from the CDC, OSHA, and the State Department of Labor and Industry. Make no mistake, if you are essential and open, you have a special responsibility to do the right thing. To help make sure Virginians hear these messages about the importance of social distancing, we're launching a statewide communication effort, including targeted messaging on VDOT's highway signs. Now, let's talk about our schools. School closures are necessary to minimize the speed at which COVID-19 spreads and protect the capacity of our healthcare system. I know this raises a lot of questions for parents and also for our students. Let's start with the academics. I want to thank our superintendents, our teachers, and other school leaders who have been caring for the families in their schools during this crisis. They sacrifice every day in normal times, and they are providing a tremendous example today. I'm hearing stories about people doing reading lessons on YouTube, teachers calling parents just to check in, and volunteers showing up to help package food for our students. This is what it means to serve others, and I thank all of you for doing that. School division leaders will decide how students can learn the information they were meant to cover for the remainder of the year. By tomorrow, our Department of Education will issue guidance to help school divisions think through those decisions and ensure that every student is served equitably. We're already working on waivers to relieve testing requirements and ensure that our students who were on track to graduate can do so. I understand that for many families, these closures present practical considerations of who will care for children during the day now that they are not in school. These questions are especially pressing for our essential workers, such as our doctors, nurses, and first responders, our grocery store workers. These people keep our communities functioning. We have 1.2 million children under age 12 in our Commonwealth, and half of them are in public schools or preschools. A Yale study estimates that 80,000 of them may be the children of healthcare workers. So we need an urgent public-private response. Today, I'm calling on our local communities, private daycare providers, community child care partners, and public schools to rally together to provide child care for the young children and school-age children of essential personnel. Our child care providers are also essential personnel. We must rally together to fill this pressing need across the Commonwealth while following strict public health protocols to keep our children safe. Today, our Department of Social Services and our Department of Education will issue guidance to communities about how to provide emergency child care services for essential personnel. Finally, I want to recognize the extraordinary work of everyone at the Department of Education and in our local schools who are continuing to make meals accessible to students during these closures. Every single division in the Commonwealth has stepped up to the plate to figure out how to feed our children, and I sincerely thank them. If you are a family wondering where your next meal is going to come from, you can text FOOD, F-O-O-D, or COMIDA, C-O-M-I-D-A. That's C-O-M-I-D-A to 877-877 to learn more about feeding sites closest to you. Now, let's talk about what this all means for us as Virginians. We are moving into a period of sacrifice. Most of us have already begun to experience this. Many businesses are closed already because their owners have done the responsible thing. I thank them for the tremendous sacrifices they have made. There is more ahead, and things are...
Virginia Governor Ralph Northam speaking there in Virginia. Carol saying that he is closing schools in the state for the balance of the year. We also have a headline coming out of Capitol Hill.
Yeah, the U.S. Senate lacking votes to advance the virus stimulus package. Senate Democrats defeating for a second time a key procedural vote to begin debate on that massive $1.6 trillion plus coronavirus package. As we know, Jason, the bipartisan tensions have been growing increasingly about this package. Meanwhile, the clock is ticking and it's getting increasingly harder for individuals in this situation. So we'll continue to watch it. I think the hopes are that something gets done by the end of the day, but we will see what happens ultimately. All right, you are listening to Bloomberg Business Week. Carol Massar along with Jason Kelly. I'm not sure if we still have... We do have Sarah Ponczak, our cross-asset reporter at Bloomberg News, on the phone from New York, along with Dave Wilson, stocks editor at Bloomberg News. He's on the phone from New Jersey. Sarah, come on in on what we're seeing in terms of today's trade. I do feel like it's very closely connected with the news out of Washington, or lack thereof.
Absolutely. I mean, overnight, you think about immediately after futures started trading last night at 6 p.m., we went limit down. And that was also closely, not long after, we heard that there was a stalemate in Congress. That is really where a lot of the focus is on for investors at the moment. And early this morning before the open, you do have that announcement from the Fed, which is really the big news of the day, essentially announcing QE Unlimited. We see a rally into positive territory only to give that up. And speaking with investors, the reality is that, yeah, it's great to know that the Fed has your back. It's great to know that the Fed is going to do everything in their power to try to make sure the system is running properly, to make sure that we can get credit to companies that need it. But until you actually have Washington on the front foot too, and actually out there with a stimulus package, then it's still going to be an issue. And even on top of the fiscal issue, not knowing what we're going to get, when we might get any sort of package from Washington. And also, we don't know what the numbers are going to look like in terms of the virus, how long this is going to persist. So those are just two very, very strong and significant overhangs, even when you have a Fed backstop at the moment.
Yeah, and Dave Wilson, come on back in here. Talk to us a little bit more. You were starting to talk about sort of the contours of this trade today, and as Carol rightly said, it really, the overall market at least, is tracking whatever is coming out of Capitol Hill. But tell us what you're seeing either in terms of sectors or some stocks that are especially on the move.
Well, one area that jumped out, Jason, from today's trading are the department stores. I mean, you had Macy's come out late Friday and suspend their dividend. Not a surprise given the setbacks in their business. They're also looking at borrowing $1.5 billion to be able to keep things going. And So you've seen that stock take quite the hit in today's trading, and its peers have come down as well. I mean, Macy's down about 16.5%. At this point, Kohl's, one of their biggest rivals, down even more, almost 17%. Biggest drop, those two stocks in the S&P 500. Nordstrom's down 10.5%. So things are really coming home to roost as more and more locations try to get people to stay at home, give orders to that effect. They're certainly not going out and shopping in the department stores, it wouldn't seem.
Sarah, come on back into in terms of cross assets, any interesting trades that are jumping out at you?
So one thing that is really interesting today, so with the Fed announcement this morning, what was really big news is that they did say that they're actually going to come out. They're going to start buying investment-grade corporate credit, and that even through exchange-traded funds. So if you were to look at LQD, that's a very popular investment-grade ETF, today it's at almost 7% in what its best day since 2008. So it shows you that a particular area of the market is at least getting the boost it's needed. Some are also questioning whether or not we might see investors try to step ahead of the Fed and try to get into funds of that sort before the Fed really does start buying.
That ticker, as you said, because your line's a little funky, Sarah, so forgive us, but I do want to get that out to our listeners. LQD, which is the iShares investment grade corporate bond ETF. I mean, Dave, this is what we found from the Fed, that they are out there showing that they will do what needs to be done to make sure that they're shoring up the credit markets, but they're also going to be buyers out there in this market to make sure it continues to function as it needs to.
Absolutely, and you see that in the investment-grade bonds, which have really taken a hit along with shares. And now it comes down to, well, where's the fiscal help for companies at this point? You think about the travel industry as sort of the obvious example there. And, until you have some kind of meeting of the minds in Congress, I mean, that group and others like it are just going to suffer here, it would seem.
And so, Sarah, anything else briefly that you are hearing from folks on the desk as you guys have your remote team going here on the Cross Asset Group?
Yeah, we're all remote, but we're hanging in there. Something that's really been standing out to me, and I'm starting to see more and more people talk about, is just this persistent outperformance of the NASDAQ 100. For example, you look at it today, the S&P right now is down roughly 3%. The NASDAQ 100 only down about 0.5 percentage point. Now, in a day like today, sure, a lot of that is chalked up to Netflix. You had analysts at Baird coming out saying that they are a key beneficiary of the spreading coronavirus. You have Netflix up 8% today. But if you were to actually look at the relative performance of the NASDAQ versus the S&P 500, we are putting in close to new records. We're at some of the highest levels, or the highest levels, since the dot-com bubble. And that's just shocking to a lot of investors who thought that once this bear market did come, that the names that led on the way up were going to lead on the way down too. But that really just has not happened.
All right, we're going to leave it there. Sarah Ponczak, thank you so much. Cross Asset team for Bloomberg. Dave Wilson, you'll be back with us later with your chart and stock of the day. Carol?
Jason, let's take a look at the financial markets right now. We've been bouncing around, so we are off our highs and lows of this session, but still down. S&P 500, a loss of almost 66 points, 2239 on the S&P, down 2.9%. Dow off almost 3% here for a decline of 576 point. 18,599 is your last print there. And the NASDAQ is down about 49 points at 6829. That index down the least on a percentage basis, Jason, just down about 0.75 of a percentage point. But again, bouncing around. And as we've been discussing, it really is contingent on what we're getting out of D.C. at this point, because the Fed man has thrown out the bazooka there and said, basically, we're going to do everything. We're going to continue to do everything, but now we're waiting for some policy moves and changes by our U.S. lawmakers. All right, we got to talk about the healthcare situation.
Absolutely.
All right, so let's get to that, folks. To date, Americares has delivered 6 tons of protective supplies for the COVID-19 pandemic, and more international and domestic shipments are planned. The company works with more than 4,000 health centers around the globe. Dr. Julie Verhees, forgive me, I just want to make sure I had that right. Julie Verhees, she is Chief Medical Officer at Americares, and she joins us on the phone from Chicago. Dr. Verhees, nice to have you here with us. Fast and furious, where are we in terms of those protective supplies for our healthcare workers?
Thank you so much for having me. As we've seen, we are having significant challenges in terms of sourcing protective equipment for healthcare workers on the front lines. At AmeriCares, we have sent shipments of personal protective equipment, particularly in hot zones here in the U.S., in Washington State, California, New York, but have, similar to other organizations, been having a significant number of challenges in terms of sourcing supplies that are so critically needed right now for healthcare workers.
I think one of the concerns was, and I certainly saw this over the weekend, Jason, you probably did too, in watching the press conferences between governors and what we got from the coronavirus task force, that there seems to be, is there the flow of equipment? Is the government kind of taking central control of it and making sure that supplies are getting to where they need to go? Because what we're seeing is price gouging as states try to access the needed supplies. Are we getting that coordinated effort that seems to be necessary at this point?
Yeah, that's a great question. I think there's a lot of action that is taking place, and there's a lot of coordination that is happening, but there's still more that's really needed. We are seeing a lot of the individual states taking significant measures, but certainly this is a cross-sectoral effort. This is an unprecedented time that we're in. We have not seen these types of shortages in previous outbreaks that we've been involved with, and so certainly there is a call for even more action and collaboration and coordination amongst the various sectors within government, but also in the private and public sectors as well.
And so, Dr. Varghese, help us understand, with this limited amount of protective gear, how does that play through to, what everyday people should be doing in terms of when to go to a hospital, when to go to a clinic, how to sort of deal with their own stuff in order to not sort of weigh too much on the system unnecessarily?
Yeah, that's a fantastic question. And I think the general public, I can't overemphasize enough the importance of social distancing. We're seeing so much of that emphasized in the media. Folks really being urged to stay at home to the best of their ability. Certainly there's needs to go out for medical care and groceries, but really trying to stay home as much as possible. And I think that every single person has an important role to play in contributing to slowing down the spread. We're hearing a lot about flattening the curve or slowing down the spread of infection. And so I think implementing social distancing, really focusing on preventative measures like basic hand washing, cough etiquette, not touching your face are so important. And I would say really we're focusing not just on kind of containing the infection, we're focusing on not overwhelming the healthcare system.
Well, Dr. Varghese, and I forgive me, I think I've been mispronouncing your name, so my apologies. But Dr. Varghese, I think that's what I was seeing a lot of questions about over the weekend, where are we getting to a point because of shortage of supplies of this protective gear for healthcare workers that medical personnel, doctors and others, will have to make choices about who they can treat or who they can provide equipment on, whether it's based on age or based on how vulnerable somebody is. I mean, are we getting to that point?
I don't think we're quite there yet.
But will we get there in a week potentially?
It's hard to know exactly what the timeline could be, and I think all of the efforts we're trying to put into place currently, both at the state and federal level, are really trying to help decrease the risk of getting there. Certainly the healthcare system and healthcare workers are already quite taxed in terms of the limitations on personal protective equipment and other types of equipment, but we're really trying to help slow down the spread and how fast we may find ourselves in that type of situation like we're seeing in Italy and other places.
And Dr. Varghese, what are we learning about, especially as we think about the biggest cities in the country, and you are there in Chicago, one of them, we've seen these restrictive measures, the essential shelter in place, even if we're not calling it that, in all these different places in California, here in New York, and also in Illinois, where you are, we're seeing other states take similar measures. What are we seeing in terms of the efficacy of that, or when will we know how effective that is?
Yeah. So it's hard to know exactly how soon because we're seeing varying levels, I'd say, of the whole shelter-in-place concept. But certainly, just urging people to social distance and to shelter-in-place, I think we can truly slow down the spread. It may take still a week or more to really understand how that kind of impacts the next wave of cases and how much of an increase or decrease we're seeing in terms of having these measures in place and the impact in terms of the case counts.
I do wonder about underserved populations and whether or not they're getting the necessary care and able to get out there. What are you seeing on that front, or what are we doing to make sure that they are taken care of along with everybody else?
Yeah, certainly we at AmeriCares are concerned about low-income, uninsured, and underinsured individuals and communities. We have clinics, 4 clinics here in Connecticut. I'm actually located in Connecticut where our AmeriCares headquarters is in. And so we have 4 free clinics where we are serving low-income, uninsured, and underinsured individuals and really trying to maintain primary care services as well. We have clinics in El Salvador as well as the slum communities of Mumbai. And what we've seen in our previous experience with outbreaks is that while there is a lot of attention and resources put behind containment of the spread of infection, there's also a need for continuation of services, especially primary care services. We saw this in Ebola where, people were dying of their chronic disease, such as hypertension or diabetes, because there weren't enough resources and access to services for their chronic care conditions. And so, as an organization, we've really tried to the best of our ability, keeping in mind the safety of our healthcare workers on the front line, continue those primary care services in addition to the screening and referrals that we're doing for COVID-19.
All right, we're going to leave it there. Thank you so much for your time. Dr. Julie Varghese is Chief Medical Officer for AmeriCares, joining us on the phone from Connecticut. Some good information there and a reminder that ultimately, Carolyn, you tweeted something to this effect earlier. It's a healthcare crisis. We talk a lot about the markets and the financial world, but this is very, very much a healthcare crisis and one that a lot of doctors are trying to deal with trickier and trickier.
All right, you're listening to Bloomberg Business Week. Carol Master along with Jason Kelly, and you are listening to Bloomberg.
This is a Bloomberg Money Minute. Investors aren't waiting around for Congress to move forward on a spending plan to blunt the fallout from the COVID-19 pandemic. Stocks remain sharply lower with no resolution in sight. The Dow Jones Industrial Average is down 601, the S&P 500 down 73, the Nasdaq Composite falling 74. Gas prices are low and headed lower, and still few are filling up. London, Kentucky is the first U.S. city to see pump prices fall below $1 a gallon. GasBuddy sees the nationwide average below $1.49 by mid-April. Companies looking to team up to fight COVID-19 will get accelerated antitrust reviews. Sources say the Justice Department and the FTC will cut the review time to no more than a week. Boeing is temporarily closing its Seattle area manufacturing plants amid the COVID-19 pandemic. It will use the 2-week closing to clean the sites while workers continue to get paid. Larry Kofsky, Bloomberg Radio.
Hi, I'm your host, Smokey Colbert, filling in for Smokey because after 75 years of...
Only you can prevent wildfires.
Turns out there's much more to say. Nearly 90% of wildfires are caused by us humans being careless, dumping our used barbecue coals willy-nilly. Guess the song was wrong. We did start the fire. That's why I respect Mother Nature and her trees, whether coniferous or new car scented. Brought to you by the U.S. Forest Service, your state forester, and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscription.
Cheating or competing? When it comes to business, do you know the difference? Say you run into a competitor at an industry event. You get to chatting about business, how you're both doing. All pretty standard. Now talk turns to margins. Maybe someone mentions prices. Maybe you agree to stop undercutting each other. Still just business, right? Wrong. Coordinating prices with your competitors is called price fixing. It's cheating and illegal. and you could be facing big fines or even prison when you get caught. Search cheating or competing to check your business practices before we check them for you. Brought to you by the CMA, the Competition and Markets Authority.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Apply by the 31st of March for a chance to win your first year in halls. Visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Imagine winning 10 grand. Yes! With Set for Life, you could win 10 grand every month for 30 years. Get in! Amazing! Woo! Yes! Sweet! Unbelievable!
Play Monday, and you could make every month amazing with Set for Life and the National Lottery. Your numbers make amazing happen. Prize may be capped. Rules, procedures, and game-specific rules apply. Players must be 16 or over.
Dave presents an evening of exclusive stand-up comedy in association with Calm, featuring Joel Dommett.
I was like, Dad, do you love my brother more than me? He went, I've just got more in common with him.
Kiri Pritchard McLean.
They're either holding an ugly baby or a heavy fish. I don't know why it's those two.
Judy Love.
Where's all my big girls? Okay, some of you be lying to yourself.
And John Robbins.
Never got my head round why 100% humidity wasn't water.
An exclusive stand-up special. Comedy against living miserably. Tomorrow at 9 on Dave.
Rita's Rowdy Enchiladas.
Every time the kids are together, it's always the same. Never a moment's peace. Didn't take me long to work out the trick, though. Shredded chicken and black bean enchiladas with lime, oregano, and my little secret. A bit of smoke and spice with chipotle paste. Hear that? Never failed yet.
Make your own Rowdy Enchiladas with Tesco British Chicken. Food love stories brought to you by Tesco.
Heroes. They're the ones we turn to in our darkest hour. Like when you blow a fuse and the lights go off. Whether it's electrics to heating, plumbing to plastering. At Local Heroes, every job completed by an expert tradesperson comes with a 12-month British Gas guarantee when you pay online. So, if it needs fixing, there's a local hero for that. To get a quote, search Local Heroes. Terms and conditions apply.
Leave it to the New York Times to make the most intelligent pop music podcast out there.
Welcome to the New York Times Popcast.
On the Popcast, the Times music staff gets together for a weekly roundtable on the hottest topics in popular music. From award show autopsies and reactions to new releases to difficult-to-process scandals and emerging themes in the music landscape, hear distinguished music critics share their perspectives on the latest music news, songs, albums, and artists of note on the New York Times Popcast. Search and favorite Popcast to join the conversation.
The puck drops. 12 players face off to win. The suspense is pure torture, but you wouldn't miss this for the world. TuneIn brings you every minute of the NHL season. Listen live to hockey when it matters most on TuneIn.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Well, Carol, all eyes continue to be on Washington, and a great scoop this morning on the Bloomberg about where the president's head may be as he thinks about the economic impact of this shutdown.
We're going to check in with our Josh Wingrove, who's there in the nation's capital. We'll get to that in just a moment. In the meantime, let's get back to your top business stories, and let's get another check on the trading day with Charlie Pellet.
Fast-moving markets down across the board. Carol Nassau, the Dow, the S&P, NASDAQ, all slumping right now. This update brought to you by New Jersey Institute of Technology, transforming computer professionals into data scientists to meet demand in this fast-growing field. Learn more at njit.edu/Jersey City. Let me give you the numbers. I'll give you the why in just a moment. With the Dow Jones Industrial Average now dropping 624 points, That is a decline there of 3.3%. S&P 500 index down 72, a drop of 3.1%. And NASDAQ is lower now by 63 points for the NASDAQ Composite Index. That is a drop right now of 0.9%. We've got the 10-year up 28.30 seconds, yield 0.75%. Gold down 3.7%, 15.53 the ounce. West Texas Intermediate crude higher by 4.1%, 23.57 a barrel on WTI. Bottom line, stocks fading as investors see little progress on a congressional spending package to blunt the fallout from the coronavirus pandemic. Measures of corporate credit risk eased after the Federal Reserve announced a massive second wave of initiatives to support a shuttered U.S. economy. So the Dow, the S&P, and NASDAQ all declining today. Netflix shares, they are trading higher. Netflix upgraded to outperform from neutral at Baird, which said the video streaming company should be, quote, a key beneficiary as the coronavirus drives more people to drop their traditional cable TV or satellite services. Analyst William Power expects this long-standing trend to continue and be amplified by sports leagues suspending their seasons. Shares of Netflix up now by 6.5%. Again, recapping, the Dow, the S&P, and NASDAQ all lower. 10-year yield 0.75%. S&P down 71. That is a drop right now of 3.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Charlie, thanks a lot. You are listening to Bloomberg Business Week. Let's get down to D.C. now. Josh Wingrove is there, White House correspondent for Bloomberg. Great story today on the terminal, as we mentioned, about where the president's head may be on this stay-at-home advice that so many of us have been given. Josh, great to have you back with Carol and myself. Tell us what the president's thinking right now.
It's hard to say. I think he is in the mind that there is some sort of way to have your cake and eat it too, that you can signal to Americans that, it's dawn again, we're getting through this. You can start, stepping back a bit from the measures that we've all started taking in the last while. But health officials are going to push back on that and say we are not out of the woods yet. For instance, the caseloads are still rising. We have no idea when they will plateau in terms of new cases. The deaths, of course, continue to rise. America has a shortage of testing and of medical supplies to treat it, everything from masks to hospital beds and ventilators. And so there's a lot of, clouds on the horizon. And it seems like a weird time for him to be preparing to sort of declare victory and start coming back towards a more normal life.
Yeah, safe to say that I think most people believe that too, Josh, that all of a sudden that's kind of the thinking. I think crucial to this, right, is that health side of the story in that, if you've had the virus, don't we need to have some testing to see if you build up some immunity to it so that you can go back? Because I think the fear is also, I feel like we were talking so much last week about the second wave as we start to go back. I think there's been some concerns about that happening in China and elsewhere. So are we thinking at all about that?
It's a good question. I mean, not really, because we don't really have the capacity to test people in that regard. I mean, I like to think of if you want to think of workspaces, let's think of like the NBA, right? Like if they wanted to start playing basketball again, they would have to test every team and the referees and coaches every game, and they just don't have that. And so you start to scale that, and that's even what would that be? 30 people maybe, or so, to bare minimum to run a game in an empty arena. Scale that to like a big company, big employer. What do you do, right? One person coming back could potentially carry it. You have no idea. So I think Trump, there is a clear movement in the last 24 hours among Trump and the people he listens to say that the economy can't stand to be on the mat all that longer. You've got to give some sort of signal, even if it is only a signal, that things will start moving